Good afternoon. Good afternoon, ladies and gentlemen. It gives me immense joy to welcome you all to AgriTech Now and Beyond, both in person as well as those who are joining us online. It is a great privilege to have so many of you from this vibrant ecosystem under one roof. We thank you all for taking the time out and honoring our efforts. The two funds organizing this event, Omnivore and Kalaari Capital, have been an integral part of supporting agri innovations over the past several years. Omnivore pioneered AgriTech investing in India and is the only impact investor in South Asia focused entirely on agriculture and food systems. To date, Omnivore has backed over 45 startups and touched the lives of more than 6.4 million farmers. Every day, Omnivore portfolio companies drive agricultural prosperity and transform food systems across India, making farming more profitable, resilient, and sustainable. Kalaari Capital is an early-stage technology-focused venture capital firm. Since 2006, Kalaari has empowered visionary entrepreneurs building unique solutions that reshape the way Indians live, work, consume, and transact. The firm's ethos is to partner early with founders and work with them to navigate the inevitable challenges of fostering ideas into successful businesses. Kalaari has always been a firm believer of the potential of this sunrise sector and is honored to be early partners of innovative ventures like Agrim and AgNext. We would also like to thank our sponsor Google Startups for helping us pull this off. Our first speaker is Mark Kahn, a managing partner at Omnivore. Mark co-founded Omnivore with Jinesh Shah in 2010. The aim was to bring technology to smallholder farmers to improve profitability, sustainability, and resilience. The goal was also to crack the status quo and improve the lives of millions of farmers in the country. Over the years, this vision has steadily transformed into reality. Most of us know Mark, so without further ado, I invite Mark Kahn on stage.
Thanks, Shaborni. Let's give Shaborni a hand and the team from Kalaari and others from Omnivore who put this event together. They've all done a wonderful job, and it's great to be here. This is a nice, intimate gathering of friends. We're all starting to come back out into the world now. Conferences are becoming a thing again, thankfully. Because if I had to do this on Zoom again, I was going to chuck myself out a window. I'm relieved and thrilled to kind of see people shake hands, drink coffee, and actually talk about what's happening. Omnivore has been at this for, honestly, probably too long. We started in 2010 with a very simple observation, and that observation was, with 25% of the economy in agriculture, 40% of the population employed there, it was wrong that no venture capital even looked at agriculture, that no venture capital backed innovators in this space, and that generally there was no disruption on the horizon. 12 years later, I am older, balder, into a second marriage, and have been through a struggle with my Omnivore teammates to change that reality. And I'm very proud of the fact that the entrepreneurs that we have backed, the ecosystem as a whole, has come a long way. There are many founders in this room that have been able to scale, impact the lives of farmers, transform value chains, and show that you can build very substantial, very impactful startups in the agriculture sector. And I think, honestly, we're just getting started. We're in 2022, we're grappling with inflation, a ground war in Europe, the rupee in free fall, and tremendous uncertainty, not just in the Indian startup ecosystem, but in startup ecosystems globally. right? There's a wonderful, wonderful meme that came out the other day of the chairman of the Federal Reserve saying, "I'll stop when you guys stop buying cat JPEGs." And I think it captures the, the mood at this moment rather well. But moments like these are important. Moments like these reveal where there is substance, reveal where customers fundamentally love products, reveal where farmer impact in our space is actually happening, and let people know who are the good actors and the bad actors in an ecosystem. For the last couple of years, if you could show GMV, people threw money at you. And some of those companies are real, and some of them aren't. And I think the next few years will show the difference between those two groups. Omnivore has always tried to back substance over flash. We have backed hardware startups since 2011, when no one thought it was viable. We have backed deep tech before it was cool. And now we're speaking a language of synthetic biology that leaves most investors cross-eyed, but where we think there is a tremendous scope for opportunity in India, even if no one else gets it yet. So, without further ado, we're very excited to have you all here. We hope that the founders in this room, looking steely-eyed at the next 12 to 24 months, are ready for a wild ride and stay focused on what actually counts. And when they're ready for a check, come see us if we're not backing you already. We're very honored to hold this event with Kalaari, a very, very strong VC fund where we've done 2 deals together and hopefully more in the future. And it gives me great pleasure to introduce virtually Vani Kola, the managing partner of Kalaari. Vani is a living legend. Vani has been at this longer than most, more successful than most, and is someone that we all just absolutely adore. So over to Vani, and thank you all for being here.
Welcome everyone to the AgriTech event hosted by Kalaari and our friends from Omnivore. I'm really sorry that I'm not able to be with you today in person, but I'm truly excited for the conversations and ideas that are emerging from this sector. Over the recent years, AgriTech has emerged as one of the most exciting sunrise sectors from India, with the active involvement of farmers through prevalent internet connection and technology evolution that has happened. We are seeing significant growth for the first time in new applications and transformative solutions to bring supply-demand imbalances into active value creation. I think in the next few years, we truly will see transformative and accretive value solutions emerge from India, for India and the world. This sector is not just about market size and valuation and the usual things that dominate investment language. It really is the opportunity to connect Bharat and India and create an equitable growth and a sustainable economy. It's a large employment sector with over 150 million farmers who take care of feeding all of us, the billion plus Indians and significant export to the rest of the world. I think the learnings from this sector, which is not about GMV and unsustainable CAC, but about creating true value creation to all the stakeholders in the ecosystem and demonstrating long-term difference in how technologies can create new business propositions. Today, we have the technology tools to truly transform supply chains, provide better price discovery, improve quality management, and increase yields, and create so much more value, the potential of which we really haven't been able to fulfill over the last 5 decades. I believe that the next decade, we will truly see the value of technology rightly applied for true problem solving. At Kalaari, we are just at the beginning of making investments into this very exciting opportunity. We are honored to be early partners with some disruptive companies and amazing founders. To name a few, I'd like to call out AgNext, Agrim, Jumbotail, and more to come. We are committed to transformative startups in this sector. I know you'll have a wonderful evening ahead with many ideas bubbling up and many new conversations and connections coming together. Have a great evening.
Good afternoon, everyone. I'm Keshav Lohia. I'm from Kalaari Capital. And I have seen so many of these faces on Zoom, different mediums, but it's so good to see everyone together in person. And I think I was the most excited about this thing, that I can finally meet so many people who I've been speaking to over the last 2 years virtually. So I am an accidental VC in agriculture. I never decided and I never thought that I would learn anything related to agriculture or say AgTech. But thanks to Vamshi here and Vani there, they put me onto it, and I am so grateful that we have this opportunity to host all of you today and meet all of these wonderful people under one roof. So without further ado, I'd like to call on Vamshi from Kalaari Capital, the host, Ravi, who's our in-house deep tech expert, and Mark, GP from Omnivore, to come on stage and do the next panel. And just to set some context, right, less than a decade ago, channeling capital into this sector was so challenging. You know, low land utilization, poor irrigation, lack of mechanization, so many deep cracks in the system, which require risk capital to be really filling on those gaps. But now, with the ubiquity of mobile data, smartphones, entrepreneurs have really started challenging and changing the status quo. But investing in agri-tech in India is no longer, you know, a niche thing. It is the mainstream thing. And we are really bullish about it at Kalaari as well as Omnivore. And I'd love to call upon these 3 gentlemen on stage to talk more about their journey in investing in agri-tech. So please welcome Mark, Vamshi, and Ravi. And Ravi will be hosting this fireside conversation with these 2 gentlemen. And I think if you don't know him, he looks at deep tech across different sectors in Kalaari, and he's a freak of nature who really understands technology better than anyone else. So thank you so much, everyone, and let's get started.
Thank you. Thank you, Keshav. I'm just a practicing engineer who can fly an aircraft. Well, I never knew Mark. We met today. Several connections and several connects, Harvard, Tata's, Deep Tech, and Applied Science, something to learn. Vamshi, I meet maybe too much, Vamshi. You know, we need to meet a little bit lesser. But look, we have 15 minutes, Mark, Vamshi. Let's make it informal, little bit of humor. So I'll start with Vamshi first, Mark, because you're already a rock star. You're already like, I don't know, Salman Khan, Shah Rukh Khan or something like that. And Vamshi wants to be one. A little bit about Vamshi. When I first met Vamshi, and I met Vamshi about 2 years back. 2 years back, I don't think he understood anything about agriculture. A little bit true, right? And now he has a farm. He does farming. Um, he has gone to Mandi. He has sold produce. He has been to various labs. Um, that's a context. That's a context of personal journey. And I want, Vamshi, you to start with that particular personal journey, but connect that personal journey that how do you build thesis in a firm like Kalaari and convince little bit stubborn partners and the whole DNA to basically believe in that particular thesis and invest in that. So briefly take us through that journey.
Thank you, Ravi. No, I think before even we joined Kalaari a couple of years back, I think there's been the fundamental fundamentals which have been established because we had done this another AgriTech event 3-4 years back. Again, I think there's been wonderful traction for that, and since then Vani has been a very good supporter of AgriTech as such. So of course it was a little more challenging when we got partners like Ravi and Kiran coming on board, but I think fundamentally we all believe that, of course I think we all come from farmer backgrounds or we have some connections with the grassroots levels with one or other level. So I think the challenge was more about not the thesis part. I think the challenge was more about whether, like what Mark was saying, are you right in the market, are you early, or are you forward, right? So I think the key question was to decide on that. And personally, I think I had a firm belief that this is the right time, basically, right? And my thesis comes from actually looking at a lot of these companies. I think we looked around like 250 companies, and you were part of most of the ICs which we got, where we got like really rejected or whatever. But the point was that it was a deep learning every instance, learning from each and every founder out there and building a thesis on it. So I would say that it was more coming from what I was learning at the ground level and actually starting to build conviction around it, and then kind of bringing that support along with the board as such, basically.
Mark, you are more Indian than I am, and I'm sure most of the folks here demystify thesis for this particular domain, Mark. You have seen a journey, and this journey is in continuum. You have seen almost everything, what is possible and what is not possible, what is now and what would be a prospective future. Very, 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 very Indian thing. And I always think about this, Mark, with the constraints what India has and the needs which India has. First of all, demystify thesis, if there is any demystification, but also talk about, are there anything which is happening in India, either from economic model perspective or from tech perspective, which can become global postulate or something like that?
Sure, so let me break those pieces apart. At the highest level, the 50,000 foot level, our thesis has always been that Indian agriculture is immortal, that this has been an agricultural superpower for thousands of years, and that the future of India is inseparable from agriculture. The last few decades, right, there's been this attempt to, with very mixed success, emulate the China model, and I think we're all over it now. India's future will not look like China's future. China is not the least bit interested in agriculture. They're interested in acquiring farms abroad or ensuring that they can feed themselves, but not with their farmers, because their farmers aren't voters. Our farmers are citizens. Our farmers are, with their families, 600 million people. We can't just dismiss them. We can't write them off. We can't abandon them. And we can't ask them to take jobs that don't exist. And so our very fundamental, very long-term thesis is that Indian agriculture, which, to be very clear, is strong for all of its challenges. The fact that a nation of 1.4 billion people is almost entirely self-sufficient from a food security standpoint is one of the miracles of the 20th century. As much as we all criticize the government when they deserve it, right? What was achieved in the last decades is really remarkable when you think about it. For all of the flaws, for all of the bureaucracy, the fact that we do not worry about food security in India for the most part is incredible. And our view is that in the coming decades, in this decade, the agricultural pillar of the economy will not wither. It will in fact strengthen. India will become a larger and larger agricultural exporter, and more of what we produce in India will go into value addition, will go into exports, and will go into processing. And that will create rural employment and rural wealth creation. None of that is easy. But if you look at, 10 years ago, I don't think anyone would have expected that India would be the world's largest shrimp exporter, right? That's been an incredible story of a bunch of farmers that were neglected by the government, ignored by the government, right? That at various times people wrote off as some sort of Andhra scheme, right? And that have roared into the present as an incredible global force in a value chain where almost all of it is exported. I think we're going to see that again and again and again in different parts of the Indian agricultural economy. I personally believe, and I think everyone at Omnivore believes, that India is an agricultural superpower in the making, that we are a smallholder version of Brazil, and that if we can manage the bottlenecks of water and climate and soil well, that agriculture in India has its best days ahead of it. That if we can combine the fact that we have the largest amount of arable land in the world, a massive rural population, with science and technology and our incredible advantages digitally, we can show the world a new path of development that is an alternative to the China model of essentially destroying the environment and other economies globally. Sorry, that was probably a little too political. Sue me. So that's at the highest level what we believe. And we believe that by backing disruptive players in this space, we can make farmers more profitable, we can make them more economically resilient, we can make Indian agriculture more sustainable, and we can address the challenge of climate action, both mitigation and adaptation, to secure a future for basically half the country. And everyone here is working on that. We all know the story. It's not easy. It's not like other sectors. You can't take the approach to metrics that you have in other sectors and apply it to ag. It won't work. But we have shown the ability to build disruptive entities in this space. Regarding the global opportunity, I'm going to do something horrible. Shriram, are you in the room? Sorry. Shriram, stand up. You can't miss him. He's tall as hell. So this is Shriram Ravi. Shriram is from Eruwaka. Eruwaka is a IoT company in Vijayawada. Shriram started in his journey, 2012? And initially was building IoT devices for aquaculture in India, found product market fit in Latin America, rocketed in sales that were 95% exports, 90, 95, and finally delivered a massive exit for our first fund quite recently when the business was acquired by Nutreco, one of the largest global feed companies. So to your question of can you build globally in India, I give you a very successful exited entrepreneur. You have to let us know what you do next, we're there. And a proof point that this can be built and should be built in India. India is a laboratory for smallholder agriculture globally. Our frugal engineering can go anywhere. And so I think this is the first of many examples in this space.
Awesome. A little bit further, and then I'm going to push Vamshi more on thesis. Mark, let us keep certain things outside. China plus strategy, everyone talks about. It's an old thing, now it has become reality because what's happening in the world. Let's keep climate outside, sustainably climate. It's a driven thing. We all know the definition of civilization. Let's keep two other things out. The economics of innovation, which is the cost and time of innovation, because that would be in favor of India. Since you have been in this domain for a very, very long time, talk to us things which will work first, which were gaps, which will work first in India, and then they will become, you have given one example, but then they will become global postulates. And then coming to you, Vamshi, since you are a new entrant per se, if I may say, what do you think where founders who are there, and there are many founders here, they would approach you and they will say, hey, by the way, if I approach Vamshi, this would be a quick IC and a quick decision kind of thing where you will not hesitate. Both different dimensions, Mark and Vamshi.
Look, I think, so if you're asking what are the opportunities in India that can translate globally?
Yes, where brilliant new models which are in favor of India, because everyone talks about China plus, and it's not only pertaining to agriculture, aerospace, defense, rare earth, anything which is related to rare earth, supply chain, blah, 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 yep. Right? Everyone talks about climate, you know what is the best way. Purely, I'm just giving energy situation, size of the farm.
So I think you have to start with the fact that there are 500 million smallholder farmers globally, and 130 million of them are in India. Many of those smallholder farmers are in countries that are just, for lack of a better word, poor. India has a particularly incredible combination because we have 130 million smallholder farmers, a massive industrial economy, a massive agricultural economy, and the third largest VC and startup ecosystem in the world. So what we develop here can go to, just to throw a country out there, Tanzania. When Tanzania, the chance that that would be developed in Tanzania is almost nil. There is a cocktail that is brewing in this ecosystem that can develop new technologies that are relevant to any smallholder globally. And since that's 500 million smallholders across parts of Latin America, sub-Saharan Africa, the Middle East, Greater South Asia, and Southeast Asia, we've got a world to win. I don't think you're going to see a lot of innovation out of India that's going to drop into North America or Europe. I don't think those are the markets we should be targeting. I think that's actually a mistake. But I think across all of the global South, you have the ability to scale from India into those markets. And we're seeing that in our portfolio, right? EcoZen's micro cold storage systems are being sold in Africa. TartanSense, which is building the lowest cost robotics stack for agriculture in the world, is rapidly going into Latin America, again, where Sriram saw such success with Eruwaka. And so I think it's about looking south and recognizing that what we have here can translate into smallholder markets globally.
Awesome. Vamshi?
Yeah, the question around, the founders and their persona and, what it means. I think what I've seen in the last, couple of years, is I think we've seen great entrepreneurs and founders actually starting up to solve micro kind of solutions on the farm as such. My biggest challenge has been to look at how these solutions would be done at a scale kind of a stuff. So, I tend to kind of talk to any founder that approaches me. I've never said no, and I have actually been very active in that space in terms of talking to everyone. And that's how, I've been learning every day, as I said. So I think for me, it's just very interesting to see the kind of entrepreneurs that are getting into the space and the kind of solutions they're bringing. It's more at a macro level how these actually end up getting into a large scale opportunity is what I look at.
Yeah. Little bit change of things here. there is deep tech and there is applied science, there is applied engineering and there is applied science. And then there is everything else, ranging from, I don't know, economics of market, GTM, blah, 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 sassification. So we'll keep that out. Do you see convergence, since you mentioned deep tech and since you mentioned applied science, do you see convergence happening? Do you see VCs having heart to put checks and get growth capital beyond early stage in India for your domain or for overall sector?
Look, I think it's been a journey. I think if you chatted with most generalist VCs 3 years ago, they would have said they're allergic to hardware. Just allergic, right? Wouldn't touch those deals. Those deals don't scale. At the same time, Omnivore's been doing hardware deals since 2011. We've done a bunch of them, right? Probably, I don't know, a fifth of our portfolio is hardware. And our first big exit was hardware. And our second exit that's coming up is hardware. And so we're big believers in deep tech and have been for a long time. I think a lot of what is changing comes from pioneering firms. I'm gonna shout out, we've never done a deal with them, but I'll shout out Pi Ventures, okay? And there are others that have seen that we have incredible engineering talent in this country, and not all of it needs to be about SaaS and marketplaces. There's an opportunity to really build serious, difficult solutions. I think you're right when you say that most of it has been at the early stage, but growth capital, slowly but surely, is coming. And in the interim, we've seen a lot of investors that are perhaps more strategic and farsighted being willing to back the space. So we've seen a lot of corporate VC actually on the hardware deep tech side of things, not necessarily taking controlling stakes, but from their CVC arms acting like normal investors, right? And helping these companies get to the point that generalist growth investors see the potential in them. A big part of this is just prior experience and education. One of the challenges, and we've written about this, wrote an article with Venki and Renika in the audience in the Indian Express back in December about how life sciences generally, and agri life sciences in particular, are a funding wasteland. Basically, no one is willing to invest in life sciences in India, certainly not on the agri side of things. But even that, we hope, is starting to change. There's been pioneering work done by the government, folks like CCAMP and BIRAC, to at least facilitate, right, R&D funding with a commercial bent. And over time, VCs will learn these new skills. Part of the problem is that if I go to Boston, you lived in Massachusetts for many, many, many years, right? I can find, I don't know, 30 to 50 VC firms that are packed full of life science PhDs. I think in the entirety of the Indian VC ecosystem, we might have two people with life science PhDs, not two firms. And so some of it is when a person working in the life sciences is trying to pitch an Indian VC, right? And you're chatting with some former McKinsey partner, right, who used to, optimize e-commerce. You're speaking different languages. And so some of that is about VCs bringing on board life scientists into our partnerships, right, into our firms, and learning the language of innovation in that space. And that's something that we're doing. We have an initiative called Omnix Bio, specifically focused on building these capabilities internally so we can back more entrepreneurs externally. We've done 2 deals in that we consider Omnix Bio deals. BioPrime, we have Renika in the audience, and Loopworm in the insect biotech space. So this is a process, this is an evolution, and this is education for investors that need to recognize that it's imperative to come up to speed in this space.
Awesome, Mark. McKinsey comment brought a little bit. I'm going to stop there. Vamshi, space, Kalaari has invested in space, Kalaari has invested in robotics and anything in between. How do you see convergence far more in depth of applied engineering and applied sciences, happening in your portfolio and overall ecosystem?
I think, overall, when we look at deep tech and the investments which you have made, say, for example, like Gigantra and all that stuff, I think space is a major component if you look from an agri-tech standpoint, and there's a lot of investments that are going into space in terms of understanding, right, from soil to, anything which is related to the farm itself, getting more data around it and all that. So I think the way, I would look at it is, how applicable is this to the, micro view of the farm itself, which I think is a little more challenging, but I think that's where the option is for us to understand deep about what that means from boundaries perspective, from a spectral analysis, what can you do with it, what is happening with the farm, and there's more to do with that. So I see a lot more happening from a convergence standpoint in that sense. So, of course, there's a lot of solutions we have seen in the last 1 year, but I'm not still able to get my thoughts around that, how these things are going to actually applicable for India per se, right? So that's where, I am right now.
No, thank you for that honesty. Mark, I'm going to push a little bit more. I'm an aerospace engineer. I am also 46, so I'm in the space of making sure that my retirement is safe. So what do you what do you think about convergence of material science, production of food, and unit economics of robotics, assuming that there would be factories which will be created in space, otherwise, unit economics from Earth to space are not. How do you think role of food engineering playing in that particular space, or do you believe in that?
I mean, I'm a pretty hardcore science fiction nerd. So when I think about food in space, I think about The Martian. I think about The Expanse. I think about these visions where, in both cases, the ability to feed yourself on Mars is an issue. I think there are a lot of things that are happening globally right now, not so much in India yet, that are very focused on these use cases. I think it's, when we imagine a future, beyond our planet, right? The whole unit economics of cellular protein probably make a lot more sense. Right now on this planet, we got a while, right? There's been billions of dollars of funding, not so much product, but, and deadlines that get pushed out, but I'm happy people are doing that work, right? Because that's going to allow us to essentially make protein, right, in giant, right, vats in orbit. When I think about the vertical and urban agriculture movement, right, in The Expanse, they have on Ganymede, sorry, if there are any guys from Pixel in the room, great vision of the future. Ganymede's greenhouses, right, greenhouses in space. And I think while I would question the economics of some urban agriculture, and to be clear, in India, this is not what we need, it's good that people are figuring out LED lighting and the ability to grow incredibly dense clusters of leafy greens and other horticultural crops in a controlled environment, because I do believe that we will get to Mars, God willing, in my lifetime. And that's going to be the tech stack that we bring there. To be very clear, and since you said get real, I think all of this, for our situation in India, with 130 million smallholder farmers and the largest amount of arable land in the world, is a very limited use. I'm happy other people are doing this to build a future off-world, but when we get back to our world, right, we have to provide for, 40% of our population. And so I don't think these are the technologies that will necessarily be as critical. Robotics is different. I would say that there is a very large robotics use case, especially as we have, right, actually a labor shortage in rural India that's getting increasingly acute. But some of this other stuff is not science fiction. It's becoming, right, reality. But its applicability for our challenges is still, I think, a generation away.
Awesome, brilliant. We don't have much time, otherwise I would have gone a little bit deep into vocational training and education and all that stuff, which is related to almost every domain. But look, nothing is possible without founders and brilliant and exceptional founders. Parallels from other sectors, Mark and Vamshi both. How do you see composition of founders who have created companies when you started, Mark, and what you see now, Mark, and what you see now, Vamshi, versus, for example, just to give you a clue in direction where I'm going, for example, in the space companies where you invest, you find, a mix of demographics in there. You have youth, you have engineers, you have researchers, you have scientists, you have highly experienced people. In EV, ex-corporate guys, some of them CTOs, CEOs, built machines for a very, very long time. What do you see and what you have seen in your investment journey, and how do you see it changing, or what do you want to change?
So I think there have been 3 waves. The first wave of AgriTech founders, sort of like Omnivore, were, I don't know, visionary fools. Like, there was no money. We were the only money. It was really hard to raise follow-on capital. And I'm not sure you could necessarily profile those founders, other than to say some of them came from corporate backgrounds, kind of. It was very, very, very idiosyncratic, and everyone was terribly brave. I think the second wave of founders that we started to see in the space, in the first half of that wave were mostly from corporate backgrounds. So, I see one of the co-founders of Arya, hi Anand, calling you out, what's up, right, came from incredible corporate pedigrees. This was, a team out of ICICI. Others came from ITC and other, kind of good firms. And then over the last few years, increasingly we see people from startup pedigrees. I'll point out Mukul, hey dude, who was growth head at Blackbuck before he founded Agrim, building out B2B on the input side of things. I think we're now in kind of a third wave. We're increasingly seeing that people are starting up, not just with prior generalist startup experience, but actually some people leaving prior AgriTech startups, having been burned, having learned, right, having a new vision of what works. And so that, I think, is very, very positive. What I want to see in increasing numbers of teams, right, and forgive me for putting it this way, is I want to see more aunties and uncles, okay? I love teams of energetic 20-somethings. Be the co-founders, but like bring on a co-founder that's been working in the agribusiness industry for the last 20 years. The one thing that drives me crazy is when people don't have that talent from the get-go or don't think those should be their co-founders. They think, oh, okay, I'll hire, that'll be an employee, right? And then you see those teams essentially like reinventing the wheel when all they would need to do is just like have a co-founder that had spent, 15 or 20 years in ITC ABD, in Godrej Agrovet, in Bayer, in Syngenta, right? We want to start seeing more of that. Some of that was because that talent was historically very conservative, but I think that's changed in the last 3 to 5 years. People don't see joining startups as crazy anymore, even people with experience in the corporate sector, even from agribusiness. And so I'm very bullish that the third wave will be this merging of talent from ag tech and talent from agribusiness, and will build better than ever before.
Great. Closing to you, Vamshi.
No, I think I second Mark's thoughts. I think we are seeing a lot of the growth stage, companies actually looking for talent which is more complementary from industry experience. I think the early stage still doesn't think that way, but at the stage where they are, I think it makes a lot more sense to do that. But I feel that that's the right way to go. I think balancing it between the industry experience and having the kind of the young energy to come together and not reinvent the wheel and kind of take it from there is, I think, the right way to go.
Thank you. Over to Keshav. I don't know, do we take questions or this is done and I can excuse? They are doing this.
They're gonna bring out a hook if we're not off the stage.
Thanks,
everyone.
Thank you.
Thank you.
Vamshi.
Thanks, Ravi.
So thank you for that, gentlemen. That was a very insightful conversation on VC in AgriTech. But before we move on to the formal agenda, I think even if I win, say, 500 rupees on Dream 11, I make it a big deal, right, that I won it. This guy just delivered the biggest exit in AgriTech, and he's just standing there in plain shirts and smiling. So I just have a very small question for you, Mr. Shirish. Let's give it a big round of applause for Mr. Shirish from Eruwaka, right? Shriram, sorry, Shriram. I'm sorry, I have so many things going in my mind. Mr. Shirish is next to speak, so I just had that. So, Mr. Shriram, in one line, how was the feeling and how was this journey when you finally exited this company? And just in one line, summarize how your thoughts.
Yeah, it's been like, I feel that I created a reference benchmark and a model of operandi. So I think the most, when I look back, why we were successful was like, as a company, the culture of the company was more on farmer centricity. How do we add real value to the farmer? Not like building GMV or satisfying investors. More like it was satisfying farmers first, so then the investors got satisfied. And the culture of the team was also most important. So lucky that we built this out of Vijayawada, so we didn't had any disturbances. So we were more focused, we were closer to our customers, and that's our day in, day out job for last 10 years. And also it took significant amount of perseverance. Before we made revenue, we had to do 5 years of R&D to convince ourselves before we sell to the farmers. So we never took shortcuts. We did our trials, got satisfied, then only we went on to sell. So that's the brief. Thank you.
Thank you so much, sir. Thank you. So I think a few weeks back, I think a month or two back, Vamshi was talking to me about this new phenomena that is now coming in town, and that is ONDC, Open Network for Digital Commerce, and I had no idea about it. I began reading more and more about it, and I realized what it can really translate to. So for those who don't know, ONDC is a community-led network that aims to create an open, inclusive, and competitive marketplace. Currently, marketplaces have end-to-end control, right from seller onboarding, customer acquisition, order fulfillment, redressal, and payments. ONDC aims to unbundle this complex system into microservices that can be addressed separately. And this promise goes beyond e-commerce. ONDC and the National Bank for Agriculture and Rural Development, NABARD, are working on a program to bring together the network to the agricultural sector and the belief that ONDC can be an invaluable tool to assist farmers in finding the right prices for their produce. And for that, I will request Mr. Shirish, the Chief Business Officer for ONDC, to come on board and tell us more about what ONDC is, what is the impact it can create, and he has the stage now. Thank you so much, Mr. Shirish, for joining us.
Thank you. Thank you, Kalaari and Omnivore, for setting this up and giving me the chance to share what ONDC is about. I'm going to do a 15-minute version of what's actually an hour-long discussion. And it's hour-long because it's about 20-25 minutes of presentation and balance all Q&A. And ONDC is not a product, it's not a final solution, but it's a capability. And the Q&A is very, very critical to understanding exactly what it can do as you start to think and apply it. And so I'll encourage you as a follow-up to today. Hopefully, if I do my job well today, you should have 1,000 questions, which I can't answer in the 15 minutes. But it should prompt you to connect with us for the full version fairly soon. So let's get started. And the genesis of ONDC actually goes back a little over 2 years when the first wave of pandemic hit. And the government was considering locking down the population, as all countries were. And the moment you lock down people, the automatic question is, can people access their necessities? And so from there was born the question that having done what we had done as a country for UPI, where everybody could transact mobile-to-mobile payments, could we create a digital infrastructure for e-commerce? At that time, and indeed 2 years later, the scene hasn't changed much. There is still very little digitization of sellers. The e-commerce penetration is still single digits. It was 4 then, 6.5 or thereabouts now. And all of that is still large urban centers. So from an India perspective, e-commerce is a niche idea. And it's a niche idea because of certain factors. Right? So today you have, everybody wants to achieve scale. You become part of e-commerce because as a seller, you want to access large number of buyers. As a buyer, you want to access a large assortment. The options for scale are very, very limited. So if you're a cab driver, you have just a couple of options. If you're a restaurant, you just have a couple of options. If you're a household product seller, you have maybe 3 or 4 options. So regardless of which product or service you're in, you have very few options that actually offer you scale. These systems are closed, and they come with their own terms and conditions. So as a seller, you can send the right product to the right customer in time, and the customer can still send it back, and you incur the cost for having to retrieve it. So, and then you get into commercial terms, like how much time you get after you sell the product, how much time it takes for your money to come, or how much commission you have to pay. And all of that is not viable for most sellers, right? So e-commerce marketplace have their place, but they come with these limitations. Now, you can do e-commerce outside of these marketplaces. You can build your own shopfront, you can build your own website, you can create a shopfront on tools like Shopify or Digital Showroom. But then if you build your own shopfront, you get rid of the issues there, which is you can now set your own terms and conditions, you can have your full catalog, but then how do you get buyers? And so you have to invest in attracting traffic, and especially if you're a single product or a narrow range product or a single brand, you will not be able to retain that traffic. Consumers want to buy assortment. If you don't have the assortment, they won't keep coming back to you, they'll go to where the assortment is. So that's a short-term solution. And building the full chain, which is buyer, seller, and all the in-between services, and stitching together the entire value chain is beyond the capability of most organizations. So with this in mind, ONDC was created to solve for commercial solutions in a different way. And there are 2 interrelated design principles. The first is unbundling. Unbundling basically means no one entity does all parts of the e-commerce value chain. Each entity does their component, and all of it comes together like a jigsaw puzzle to complete the picture. And for it to come together like a jigsaw puzzle, there needs to be interoperability. All the parts need to fit each other, need to understand each other, and it's all electronic. So the messaging needs to be following a common protocol in order to be able to get there. So that's the combination that has led to the actual design of e-commerce. Now let's understand what unbundling really does. If you look at inside a platform, and this is a simplified view, there's a set of activities that are buyer-focused. Right? So the whole activity of searching for a product, adding to cart, making payments, that's the buyer-side activity. Then you have seller-side activities, the digitization of catalog, digitization of inventory, order management, all the customer-related activities of cancellation fulfillment. So those are the seller-side activities. And then you've got fulfillment activities, shipment, delivery, warehousing, all of that. Now, inside a platform, all these are connected in a seamless fashion through their own protocol. And as you look at different platforms, each one has their own protocol, because of which each platform is like an independent planet. They're just completely unconnected from each other. So a buyer on one platform cannot buy from a seller on another. Right? These are all completely separate universes. And buyer and seller have to be in the same platform to be able to transact. Now, when you unbundle, what happens is you create that freedom. So now you have one entity that will provide just the buyer-side services. So anybody who has a user base and some software capability can become a buyer application. Now you do not need to be an e-commerce entity to be able to do this. So you look at banks, they have a user base, they have software capability, banks can become buyer application. Telecom companies, and some of them have user bases even larger than marketplaces, right? If you look at Jio and Airtel, they've got 450, 500 million users. So they have a user base and software capability, they can become a buyer application. Social media companies, messaging applications, any one of them can become a buyer application. All they've got to do is enable these services, which is search, adding to cart, checkout, and connectivity with the seller side. Similarly, you will have entities that can do only seller side activities. So think about companies that make POS software, point of sale software, which is running on a standalone machine inside a store, doing the billing for that store. Now that software knows the inventory, knows the catalog, but it's a standalone store. And that software gets ONDC enabled, it's visible to the network, and anybody placing an order or searching for a product that's available in that store will see that store and be able to place that order. And same with logistics. And there will be different kinds of logistics, large scale, small scale, informal, formal, all forms of logistics will be available. So as everybody contributes these components and plugs it in, you basically get a network where there are lots of buyer applications, lots of seller applications, lots of logistics providers, and all of them being able to interact with each other. And so now this gives rise to unique cases, use cases that will not be possible today. And again, in 15 minutes, I can't point to all of them. But let me explain how the structure works and then at least share one case so you understand the capability of this network. So on one side, you have a buyer, you have a set of buyers, sorry, not one buyer, you have a set of buyers who are connected with buyer applications. And buyer applications can be a mobile app, a web page, messaging tool. It can even be Siri or Alexa. So any software that a buyer can use to search for a product. It's like a concierge. On the other side, you have seller applications that onboard the sellers with their catalogs and their inventory. And so when a buyer is searching, depending on the product category, the search is broadcast to the relevant set of sellers. So if you're looking for cooking oil, that search goes to Kirana catalogs. If you're looking for t-shirts, that goes to apparel catalogs. If you're looking for a mobile charger, that will go to electronic catalogs. So search is broadcast to seller catalogs. Wherever there is a matching entry, it comes back to the buyer side, presented to the buyer to select and add, and out. Now in this, the buyer journey, you will note, is exactly as it is today. I enter a search, I got options, I added to cart, I checked out, and I started receiving tracking information. What is different is that it was solved not by one entity putting together the entire chain, it was solved by different entities coming together. And so when that happens, it creates opportunity for additional solutions. Also, each entity can be both a buyer and a seller. Right? So you could be buying, let's say, you could be selling an item in retail, and you could be buying the same item in wholesale. Or you could be selling an item in retail, and you could be buying delivery services on the network. So a single entity can be both a buyer and a seller. And when we began, we started, as I said, with looking at essentials. So we began with Kirana stores. But since then, we have now been speaking to many domains. We're speaking to travel, tourism, hospitality, agriculture, banking, electronics, B2B, pretty much every domain that you can think of. And each time we work with the ecosystem, we examine the business flows, we look at a protocol and make sure that it is enabled, and then we start bringing them on board. So now we have home and decor products also available, and we're beginning to get some sports products as well. So with time, this network will encompass pretty much all kinds of sellers, all kinds of domains, all services. And when that happens, you will get experiences that are not even possible on platforms today. So think about somebody who's based originally in Delhi, gets posted for a one-year assignment to Kerala. He needs a suitcase, he needs a flight ticket, needs a service apartment, maybe even wants to learn the local language there. Today, these 4 requirements will be fulfilled on 4 different platforms, 4 different journeys, 4 different checkouts, 4 different experiences. But once all products and services are on ONDC, all it means is add suitcase to cart, add flight ticket to cart, add hotel room to cart, add language lesson to cart, and single checkout. So that is the heart of the structure and why it will enable multiple kinds of benefits. This itself will take a long time, but let me quickly run through a few highlights. First, for buyers, the benefit is actually the entire universe of sellers and their catalogs through a single application. And importantly, buyer applications have loyalty only to buyer. In a marketplace, marketplaces have buyers and sellers, and sometimes they have loyalty to one side, sometimes to the other. But buyer applications will have loyalty only to the buyers. And all buyer applications can see the entire universe of sellers. So nobody has unique exclusive sellers or exclusive products. So the only way they will win is by providing superior buyer experience. Sellers benefit in a lot of ways. So first of all, with a single registration, now you can see the entire buyer universe, and the entire buyer universe can see you. No longer do you need to register on multiple platforms just to have a larger buyer pool to approach. With a single registration, you can do that. And also you can operate on your own terms and conditions. So you can decide where you want the orders from. You can decide the conditions in which you will accept returns. You can decide what commissions you want to operate with. You can decide in how much time you want your money. And those become your terms and conditions. And whenever there is a match between the buyer side and the seller side, that transaction goes through. So you might not get all the universe of orders that you might have if you weren't setting your own conditions, but at least whatever you get, those will be profitable for you. And because you aren't building all the parts of the chain, there are other entities who are building that, all experts and efficient at that level. Therefore, your price realization, or as in your realization for the price the consumer pays, goes up. So all these factors, a larger buyer universe, operating on your own terms and conditions, lower administrative costs of maintaining a single registration, better realization, all of that leads to profitability. In addition to this, search, just the way buyer applications will have loyalty only to buyers, seller applications will have loyalty only to sellers. And one of the things they will do just voluntarily is share a lot of data. So seller applications see all the search volume that is coming, and they can share some of this information. So they can go to a Kirana store and tell him which are the top 100 Kirana items and check whether his catalog has all of them, and if not, he can expand his catalog. So in this fashion, insights can be shared for sellers to grow, which then in turn helps seller applications to grow. Another important difference, reputation. Scale on e-commerce happens when consumers buy from sellers they never knew. If you only buy from sellers you knew, then that's a very small circle. So scale happens when people buy from sellers you did not know, and the only reason you will buy it if you see a reputation that you're comfortable with. Right? So even if it is a well-known platform, if you see a seller with a 2 on 5 rating, you will still not buy. Now, the reputation is an asset of the seller. It's the seller's performance that has generated that reputation. But today, that reputation is locked inside a platform. So when that seller goes and joins another platform, the seller starts from zero. He does not have access to his own asset which he has built. On ONDC, the reputation is not locked inside a seller application, it is with the seller. So if the seller joins the network through a different application, they'll be able to port their reputation with it, which creates an incentive to first build a great reputation, also creates an incentive for seller applications to provide great service, otherwise the seller will simply shift. And finally, because it's an unbundled network, no one entity is doing all the business activities, no one entity has all the components of the data. Nobody is in a position to take that data, create their own supply chain, create their own store brand, and replace the original sellers with their own supply chain. So disintermediation risk goes down to zero. And then finally, looking at the third constituency, technology companies. Technology companies also don't need to build an entire solution to benefit from e-commerce. You can just bring a component which gets plugged in. So we had a company come to us that can convert Indic language spoken words into search strings. Right? So that can be plugged into the search part of all buyer applications, and you can earn a revenue. Or somebody can create, for a hand cart vegetable vendor, can create a tool that just simply scans the cart, identifies the vegetables, renders them in 25 Indian languages, and he enters the rupees per kilo and his catalog is ready. So components can be built and you can start earning from there and scale up. So ONDC is really all about unbundling, creating components, allowing various models to get created and allowing each one of them to scale on their basis by each entity focusing only on their own strength and not having to build all the parts. So that's the kind of high-speedy version. Now you will see these are the companies who are already in various stages of onboarding with us. Very few e-commerce names you will see there. So lots of companies that today are not in e-commerce will now become part of e-commerce. Why? Because each person is doing a different component. Nobody's building the entire chain. So as more participants come, they bring more buyers and sellers, they bring more solutions, they bring more models. We will have an opportunity for e-commerce to expand much faster and very differently from the existing models. So all of you are interested for the full version and more depth, as well as an opportunity to ask a question. So as I said, the Q&A usually lasts longer than the presentation, and it is key to understanding how it applies. So I encourage you to write to team@ondc.org, and we'd love to take you through the full story and address all the questions. Thank you.
So thank you so much for that, Mr. Shirish. I think that was quite insightful, and I got to know so much more about ONDC that I did not. So for a business to achieve, the trifecta of profitability, resilience, scalability, what are the common challenges? While creating this blueprint for the future, what questions do we entrepreneurs need to ask? The next panel will really delve into the complexities of building long-term value creation and offer a rich set of perspectives on how do you really scale, but scale with a lot of profitability. And I think this is the topic that has really been in the air, and I think Mr. Hemendra also wrote an article over it which said GM over GMV, right? Which is going to chart the next course for Indian agriculture. I think before we move ahead and the setup is done, I'd love to call upon Mr. Hemendra on stage, right? And while Mr. Mark Kahn may be the prodigal son of Indian agriculture, I believe Mr. Hemendra is the godfather, right? And I think we have a member of the mafia as well. We'll call him out later. Right, so today's newspapers called him, but we have Mr. Hemendra. So Mr. Hemendra, just one small question for you, and I think we have all immense, deep respect for him, because when we started out, I think Vamshi and me, we started looking at AgriTech 2 years back. I think he was there helping us understand what are the different moving pieces of the puzzle, and I think what we do today, I think a lot of us in the VC community owe a lot to him. And a lot of founders, I think, really look up to you as an advisor, as a member of their boards, and not just startups. I think even big organizations look up to Mr. Hemendra for advice. So a small question for you, Mr. Hemendra. How did this all start, right? This phenomena of working with startups, working with conglomerates at the same time, and how do you manage this rubber band, if I may say, because what may be the interest of, say, a big seed manufacturer or a big exporter may not be in the interest of, say, a startup, and you manage to wear so many hats every day. So just a very small 200-word answer if you can give us.
Sure, I'll be crisp. So I'll share something I think which I've never shared before. So started in 1994. I graduated from my college. I did my agriculture engineering. With God's grace, I was a topper. I was first in GATE in India. I applied to maybe 20 odd companies, the tractor companies, the food companies, not a single call. So that was the fate of agricultural graduates way back in 94. So there was a, I took a pledge that I'll make this sector sexy someday. And that's how it started. And thankfully, I think for the last 10 years, with so many entrepreneurs, I think many of them sitting in the room, and I think the kind of ecosystem that is being created is mind-blowing. All credit to entrepreneurs. Don't call me guru. I have learned all of it from entrepreneurs. They teach me every day. And I have to unlearn, relearn, and learn from themselves. And I'm very hopeful that the future of Indian agriculture is in safe hands. And thanks to everyone, the investors, the incubators, the government, and of course, the startups for making it happen. Thank you.
So without further ado, I think I'd just love to call on the panelists for this one. So we have Mr. Anand Chandra, co-founder, executive director of Arya.ag. Mukul Garg, the co-founder for Agrim. Mr. Sanjeev Rangras, an angel investor, ex-ITC2 on the stage. And Mr. Hemendra Mathur to moderate this discussion.
Okay, great. Good evening and welcome to this second fireside session of the day. And the topic given to me is long-term value creation, extremely important topic. So before we get into the panel discussion, let me just set context. What do we mean by value creation when it comes to agriculture? Clearly, first question, for whom we are creating the value? And second, how large is that value? So I would say there are two key stakeholders, as in two buckets of key stakeholders. One is clearly farmers, and I think we discussed a lot about that in the last session also. I think huge opportunity for creating value, especially for smallholder farmers who sell their products at the nearest mandi at the time when the prices are lowest. That is the real situation on the ground. So how do we enable farmers? How do we empower farmers to sell when they want to sell, where they want to sell? How do we enable them to sell products instead of commodities? And how do we help them to sell brands instead of products? I think that's where the future lies. Also, you can create value by making sure farmer gets the right inputs at the right price at the right time. I think you'll be surprised. A significant share of inputs sold in the market are still spurious. You know, that's the fact of the matter. So I think that is another opportunity. Credit, you know, I've spoken multiple times about the convergence of AgriTech and fintech. Again, the fact is most of the farmers borrow from informal sources. The cost of credit 2%, 3%, 5% per month. Tell me how many businesses in the world make money paying that kind of interest? I don't think anyone, right? So how do we bring down the cost of credit for farmers to under 10%? You know, I think that's where the opportunity is. How do we de-risk farming? You know, we all the time we talk about growth. I think farmer clearly is sharing a disproportionate share of risk as part of the value chain than any other part of the value chain member. So how do we de-risk farming for the farmer? And what is this value? You know, I was just doing some calculation and a lot of it is I've learned from the startups I work with. There are empirical evidences on 1 hectare of land, if there is some AgriTech solution or a bundle of AgriTech solutions, you can create economic value of 10,000 to 30,000 rupees per hectare. It could be more income, it could be saving, you know, it could be low cost of credit, low interest cost. So all combined, something in this range. So I was just doing some back of the envelope calculation. Let's say there are 150 million farmers in the country. Let's say 1/3 adopt some sort of AgriTech solution and they either make 10,000 more or save 10,000 rupees, you know, on a very, very conservative basis. If you multiply, the number comes out to be $450 billion. I think that's a very large number, right? So that is the kind of value which can be created on the ground. And second, I would put all the stakeholders together. Any input company selling to the farmer, any aggregator, distributor, processor who's buying from the farmer, any lender who's giving loans to the farmer, even if you build 10% efficiency there, right? And there are multiple inefficiencies. Even if you create 10% efficiency, that could mean another $50 to $100 billion. So we're talking a market which is upwards of $500 billion. I'm not even adding ancillary industries, the export opportunity. In the last session, we talked about exports, etc. I think if you all add that up, I think it can go up significantly. And clearly, if you're creating that value, you can get the slice of that share, right? I think that's where all the startups come into picture. And that's where I'm going to challenge some of the startups who are on the panel today in terms of their thesis on value creation. And I'm fortunate to have two exceptional founders and one prolific angel investors, a seasoned professional on this panel to talk about it. So we have Mukul from Agri, we have Anand from Arya.ag, and Sanjeev from, he's ex-ITC, but now he's known as angel investor, actively investing in the sector. Super angel, I stand corrected. So it's going to be fireside, so it'll be short answers and crisp, short questions and crisp answers. Maybe I can start you with Mukul. You're trying to make the whole agri input supply chain efficient, have a very interesting model, demonstrated significant amount of scale in last few months and few years. What are the top 3 value drivers for a business like you?
Top 3 is too much, I guess. So, so I guess for us, it has been obsession with the customer, right? So when we started, right, like we are the only company, those who are focusing on the retailers. Everyone in the ecosystem is focusing on farmers. We identified if we have to solve something for the farmer, right, we need to make sure wherever the farmer is going, we need to solve for them. So every decision which we are taking in the company is focused towards the retailer. And not getting distracted is the second thing. So there are many opportunities which are coming every now and then. We are saying like, no, we don't have to focus on other opportunities right now. We just have to solve for the retailer. I guess that has been a real challenge for us also. Like building for retailers is very difficult because we don't understand their use cases very easily, right? When you are an end consumer, like when we are customers of Amazon, Flipkart, we understand the use cases really well. But the retailer use case is very different. How fast do you rotate the inventory? When do you buy, right? Understanding those factors is very, very difficult. And I guess keeping focus on that has been the real challenge for us. So I guess that is more important.
And are retailers willing to change? Are they willing to digitize, become more transparent? Do you see that openness?
See, in India SME is very different, right? India SME moves on the value, right? If they are able to save some delta money, then only they'll think about you. For them, it's not about technology. It's not about the X factor, right? It's about how much value are you creating for me. And that can be through better pricing, better selection in their shop, or maybe through credit, right? So they don't think about technology first, right? They don't think you are a technology player, right? They would think how much benefit are you giving me, right? So I guess it starts from there.
Great. So the unit economics at the retail level.
Yeah.
Great. Moving from input to output, I think Arya has demonstrated significant amount of value creation on the post-harvest side. Managing multiple warehouses, digitizing, enabling trade for farmers, traders, processors, right? Yeah. Again, same question what I asked Mukul. What do you think are the top value creation drivers for any post-harvest company, not just Arya?
With investors being around, I have one answer for the investors and the second answer, which is something which I believe in.
You can give the investor answer
most
first.
of the investors is on the storyline where you get higher valuation for the company and an exit. For me, the biggest value creation is when we are able to solve problem for somebody. Like for example, the problem which we are trying to solve is giving a freedom to the depositors, mostly the farmers or the traders, freedom to sell when, to whom, and where. That's what we believe will add value. Value creation for us is profitability. We have been bankers and we firmly believe in the bottom line. Top line is something we know you burn capital, you can get it, but bottom line is what will differentiate something which is long-term and sustainable. Because once the capital flow tap is closed, that is when your business model gets really tested. So if you are profitable, you will be able to sail through and will be able to grow and achieve. So value creation for these three legs or the stakeholders, this is how I'll define it.
Great, Anand. And I'm so happy you talked about profitability, a term which was lost in 2021 completely.
Happy that is back in discussion now.
It's back with the bang, and I'm sure someone like you who's demonstrated profitability right from the beginning is going to have an edge. So
we have been profitable from year one of operations. So we've been a bottom line driven organizations. We never burned capital.
So I think one myth that you have to compromise profitability for scale is broken right away. Thanks, Sanjeev. You've been into this sector for ages, I think more than anyone in the room, I guess. So your experience as a professional working with ITC for many years, and now, as Mukul said, a super angel in like multiple startups. How do we drive value? How do we create value? Not just for investors, but for everyone who's part of the ecosystem.
Yeah. Thanks, Hemendra. So I need to first respond to a few things which Mark talked about, because he referred to some uncles and all. So I'm one of those uncles, okay? Hi, Mark. No, you're not. Okay, fine. So the uncle he defined, I personify that, all right? So I'm a great one who actually pushes for young startups to have some experience in their bank. And that's where I see most of these startups going wrong. But before I come into that, so I've spent about 4 decades in ITC. And in the last decade, I was the chief executive for the Agri business. So my biggest regret today whilst I'm sitting here is, I did not spot Sriram in Vijayawada. I was in Guntur for 12 years, so I missed out an opportunity right below my nose. So that's the biggest regret I'm walking out with. So my reflection, I will talk about through my lens as the CEO for the ITC's Agri business. There are 2 parts of the business. One is the one where we do trading and large procurement of wheat, soya, etc. The other is the value-added part where we process tobacco, we process spices, and so many other things. I think my thesis has always been, and that's the thesis which I try and also propagate, is all about keeping farmer at the core. I think Sriram talked about it. Unless this person makes money, he's the biggest risk taker. I don't think any of you who invest in the stock market would ever invest on a farmer. He doesn't have anything to show. Everything is risky. If you look at all the parameters which come in, lots of engineers out here, everything is against him, right? All things are upfront. You put investments upfront, you put labor upfront, you put seeds upfront. The end product, you can't even see sight of it unless there is a good harvest and there is a good sale, unless people like him come and buy it at a decent price. And that also depends on what happens in the balanced part of the world also. So to me, my thesis has always been, if the farmer makes money, we make money, right? So this has been the core value proposition for us, for me at least. Second is, there is a huge value chain. A lot of startups come and talk to me about disrupting the middlemen. You can't disrupt them. This values, you have to work along with them. Right? So I believe that even if you look at our Echopal model, we tried to disrupt at times, and then we had huge issues in the early 2000s where we had a lot of chaos in Bhopal, etc. I think we did realize that time that middlemen have to be very much part and parcel of this thing. How do you make them, help them make money, and then you will make money. And the other part which I've been talking about is that when you build this pipeline to the farmer, value will happen when you build trust. So this pipeline has to be of trust. Whether you deal with the farmer on agri, whether you deal with them on inputs or outputs. If the whole pipeline is on trust, believe me, anything can be pumped through that pipeline. Once you have trust, you can do e-commerce, you can sell clothes, you can sell medicines, you can do everything. Everything can ride on that. And that is the model which I think ITC is following right now in the new avatar called eMARS. So that is my definition of value, Hemendra.
Thanks, Sanjeev. This is wonderful. And I think you raised this point of trust. So someone like an ITC or a TEFE or a DCM Shriram who've been in the market for decades, enjoy that trust. What about an ARIA or an Agrim or anyone? how do you, for a startup, what is the message? How do you build trust with farmers? What is the best way to go about it?
Okay, so I have about 7, 8 investments in the agri startup, and I don't evaluate very closely. I just go by the people. So that's my thesis. If I have worked with the person, if I know the person, I normally invest because I believe that talent has a lot to do with it. So my advice is that even small people, even when you start up, even when you do your POC, if I look at, say, WeGrow, if I look at Bharat Agri, right? My thesis was always that you can never charge the farmer. It was a freemium product. But Bharat Agri, which I'm noticing, is being able to charge, and the farmers are willing to pay. Oh boy, that is something very, very counterintuitive to me. Because when I built the eChopal model, when we built it, it was not even supposed to be charging anything to the farmer. We said you can't charge the farmer, he's not going to pay. But there are people who are pivoting and saying, yes, indeed you can build trust. And trust will only come when the farmer makes money. Please understand. It's the economics which work out. Please don't try and make money out of the farmer. You have to first help him make money, and then you can ride on it. So that's my...
Absolutely. I think you're spot on. And that's very interesting. As an investor, we talk about unit economics in AgriTech. It's quite complex. Frankly, I've struggled. Farmer should make money. Someone who's selling to farmer should make money. Someone who's buying from farmer should make money. And the startup should make money. So it's complex. I totally understand. That brings me to the second part. I think for value creation, especially from startup to scale up, I think both these startups represent that. One big challenge is talent. Talent. How do you hire? How do you build organization for growth? In fact, for last few months, I don't get calls for funding. I get calls for 2 things. One is to moderate the panels. I have to really rediscover my business model for sure. And second, can you please find a CTO? Can you please find head of sales, head of supply chain, head of HR? And, talent is scarce. All said and done, I think we discussed people from agri-businesses joining AgriTech, which is a good sign. But another challenge here is a lot of these agri-businesses are also customers for these AgriTech. So that creates some kind of friction. I don't know. This is that elephant versus cheetahs. I don't know where this battle is going to end. But I think there are some fault lines out there. So my question to you, Mukul, you built substantial business. I'm sure you must have hired a lot of people in your team. How do you create the layer below founders? Of course, founders are committed and they're going to be there forever. But what about the team under you? How to make your business more founder-driven to more process-driven by hiring the right talent?
So, so the challenge is twofold, right? So back in this is my technically third startup, right? Back in 2013, right? The challenge used to be getting talent for startups in general, right? Where we had to get the people from different corporate businesses where we have to show them the value which can be created over the next 10 years. I guess with the recent success with Flipkart exit, right? That was the poster boy of the startup system, right? So the things changed post that, right? Now the challenge for us in general has been people are not aware what agriculture is, right? Getting talent, like back in Blackbuck days also, the challenge used to be nobody loved logistics until it became the thing in the ecosystem, right? Now I guess it's the early days for us where the talent starts to understand agriculture is the next thing, right? So I guess there is a lot of time which we are spending on education of the people, right? The hiring process does not start from the fact, okay, here is an interview, you have to give the interview and done, right? I guess the initial part in the interview process goes into explaining them what this opportunity is. So I guess there is a lot of learning both at the investor end as well as on the talent end, right? So which we need to do consciously. Now the second part is in terms of how do you build team, right, and the processes. So the challenge on that has been, with the recent, a lot of money flowing into the system, right? Every large company tags it as a startup, right? Razorpay tags it itself as a startup, right? Even though they are a large organization now. So the giving clarity to the talent at an early stage. Like this is an early stage. It's a real startup versus a secure job, right? So I guess like getting talent in that band, like when you are early stage to like Series A, explaining them what startup really means has been a real challenge. Now, in terms of the processes, I guess that requires a lot of thinking, putting down the structure and defining the roles, even there is a lot of chaos. So I guess that's the journey everyone has to live through that. But every company has a different model to that. What we have figured out, giving ownership to the person, right, is the real way of dealing with things. They will do mistakes, right? You have to accept those mistakes and create an environment where they are able to make mistakes. So I guess that has been the real success for us. So happy that with the team what we have today.
Great. I just wonder how much selling a founder has to do, not just to investors, but to to sell every day, right? Anand, to you, coming from ICICI, I think another finest organization when it comes to talent, how difficult for you, for Arya to hire talent, especially early stage, when you were Series A, Series B stage, how difficult was it for you?
I think we were fortunate enough. See, ICICI is a university where people graduate from and do well, especially on the finance side. So I'll just correlate this answer to what we heard with Mark talking about uncles and aunties. See, when you have like advantage with us, I had an 8-year work ex and my other colleague Prasanna had a 12-year work ex. So pretty much in the industry, we knew people around. So that helped us to get talent. So if you see the second in line at Arya are ex-ICICIs. So you automatically, when you work in a large organization, which is a process-driven organization, where there is no room for errors because you are handling money, whether you're giving loan, whether you're sitting at the counter, these organizations build much better processes than you will see in any other organization. So that advantage was there with us. We knew people. We had Ritesh, Sandeep, who joined us within 1 year work when we started. So that's because you know people, you know their strengths. What else do you need? You need that chemistry, and that chemistry worked for us. So our second in line are mostly ICICI Bank colleagues who were there with us, and that helped. So what Mark said, I will just say, when you do a startup with 8-10 year work experience, or you have somebody who has that experience, you will get people to work with you. You may not get people who are ready to, I'll say, off-the-shelf people that you put them and you expect them to deliver, until unless it's really a technical field. But you need people to manage people for you.
Right.
It's about time and people management.
So yeah, so it's hard, but not so hard. So that's great news. Sanjeev, any advice for startups, how to go about talent hiring?
I have advice for startups, I have advice for VC funds, and I have advice for several other people. So let me start this way. I have, in my 40 years, so people have asked me what have I done in ITC. So I'm basically a hunter. So I have hunted talent. And I have prided myself in getting wild horses and converting them into race horses. So that's the thing that I have done, and that's the reason why there are so many of people who worked with me, very successful outside. But 9 out of 10 times when startups call me these days, I find that they're completely broken on the HR and the finance side, completely broken. So my advice to founders is that you have a brilliant idea, right? And the moment you get funds, you are not the owners. You are now have a responsibility to your stakeholders. So that notion that I own the company, just trash it. So there are some founders who believe that they can do tech, they can do product, they can do HR, they can do finance. Bullshit. You cannot. Let's please understand that. Let's keep it aside. And these are the startups, I will not take names, which are going down the tube. Right? They may see some glimmer of hope here and there, but these are startups where I'm basically telling them, I'm walking out, I'm not investing. So you really need to get your act together. First of all, one moment you get funds in, make sure that you are balanced out. And that's where I support a lot what Mark says. You need to get experience. You people have not seen, just because you've seen 4 years of ops doesn't make you a king out there. You need to. You've not walked the thing for 30, 40 years. You need to get people in. And especially if you're into manufacturing, don't try. Manufacturing is I'm seeing just too many failures in manufacturing. So please be careful on that. The other request to the VCs, people like Mark and the Kalaari people out here, the partner sitting, Vamshi is here, is that, you know, in your term sheets, etc., also please mention a few other things which you expect them to perform, other than only terms which are financial in nature. I think there is an onus and a responsibility when you put in so much of money along with people like him and him, you need to, you know, also perhaps guide them, right? No person is going to tell that I do not know. So first of all, I think the startups need to know that a word called I do not know, I need help, right? And second is the funds need to perhaps also help them and guide them actively. And I think Mark is doing it. Mark is recruiting some talent. He reaches out frequently, and he's really involved. But I see several other funds not doing it and then chasing those founders, and they're floundering at the end of it. You 1 year down the line, you burnt about 10, 15 million, and you do not know what is happening. So that's what I would say.
Great piece of advice. And in fact, 2 days back, a founder called me. He built a 500 crore business. He said, Hemendra, find me a CEO. And I said, what happened? You're quitting? He said, no. He said, I'm a great innovator, but I'm a very poor executor. I think that is a very honest admission. I've rarely heard from a founder. So I think, yeah, it's good to know what his strengths and weaknesses are. I think that's wonderful. So with that, I think we have 10 minutes left, maybe 2 more rounds of questions. You know, I think there's no value which can be created without the risk and without de-risking the businesses, right? And thankfully, in agriculture, there's no dearth of risk. You know, it can come from any side. The climate, the policy, I think lots can change. If I have to ask you, I think both of you, you have successfully scaled, and I really want you to succeed big time. But if there is one risk which can really push you back, what would be that? Anand, maybe you can go first.
Geopolitical.
Sorry?
The political risk with agriculture is the biggest risk.
Okay.
I'm sorry, I don't know if they are government officials, just ignore that word, but that's the biggest risk which you carry. There's a lot of uncertainty pertaining to agri, where everybody views this as a vote bank and make policies around which may disrupt the market. So my only advice to government is to keep the industry aside and keep the welfare aside. Don't mix them. That is all. That's the biggest risk if you ask in agri we run. You never know when the new policy comes and hits you.
Okay, fair enough.
That is more true for you than us. Yeah. So for us, right, I guess the risk which we think is just like, that is an internal risk, not an external risk. Is it staying focused on the customer? I mean, I guess any company which has sold really well, like in last 3-4 decades, right, in the technology, it has been companies, those who are focusing on the customer and trying to build the solution for them, right? They never failed, right? So keeping a large organization focused on solving for the customer, right, is very difficult job. It's a very, very difficult job. Like, you know, you have all the temptations out there. For him, they are larger. They are very large now, but for companies like, you cannot manage, right? So for us, companies like us, right, unless we hit that stage, right, the real question is how do we stay focused? And that is the biggest risk which we run as a company. I mean, you might end up hiring a good L2 team, right? But essentially keeping them aligned with the larger vision and making sure that you are executing in that direction is far more difficult than external risk.
Absolutely, and it's so easy to lose focus in a sector like AgriTech. You know, once you have a farmer relationship, you want to sell, you want to buy, you want to lend, you want to do hundreds of things. And of course, there's a journey to it. You can't do it right from the beginning. Policy risk, I know it's tough to handle. All I want to say, and I've said it to multiple founders, that keep government on your side at least. Meet them more often. And fortunately, government sees AgriTech as a growth driver for agriculture. You know, Prime Minister is going to preside over an AgriTech conclave on 17th and 18th October, which is a clear indication that government is very positive.
Directionally, things are going right now.
Yeah,
I mean, government is helping more than in the previous Avatar.
So we have a newcomer, Mayank from Resha Mandi. Mayank, you're going to be ragged for being late.
So over to you for the next half an hour.
No problem, Mayank. So since we have you, I'll probably take few minutes extra. Subhadeep, please grant me extra 5 minutes. I don't want to lose Mayank's inputs on a very important topic. So Mayank, the question that we had so far, what are the value drivers for the businesses? What are the risks that we see? How do we hire for talent? I think someone like you who's built a very unique supply chain, I think, focusing on fibers. I know early days when you were building Resha Mandi, we had some interesting chat around it. How do you create value, by going deep or by going wide? I think that's a question a lot of startups struggle to answer, especially when they're new. What's your advice to a lot of young startups sitting in the room?
I think value can be created in many ways. Whether you go deep into a stack, whether it's if you're picking up fiber as a market and you're going deep into it, or you're saying that I want to just remain between two stakeholders and I'm going to have a horizontal outlook to that. So it depends as to what is your synergy with the market. What do you understand as a founder, rather than the gap in the market as such. Because what happens is if you don't understand the market well, and you don't understand that nuance of the process well, it just, it does not allow you to grow the way an investor would want or the way you would want yourself, right? And that, I think, that remains a challenge that the founder has to solve for first before he gets into the journey.
Right. No, totally agree with you, and I get surprised by so many startups building farm to fork across categories. I think it's so tough, even cracking one category, and I think you are someone who's demonstrated. In fact, after Resha Mandi, I've seen people focusing on turmeric, on cashews and stuff like that. So there are a lot of specialized play. Of course, animal protein has picked up quite a bit. So clearly there's value in going deep rather than going wide.
That's exactly what happened in dairy and egg and other supply chains. The spices now, there is a new focus towards that. Right. So once somebody is successful, everybody starts to look at that model and everybody starts replicating it. Great, you do that. But as a founder, if you are coming from a background of doing e-commerce, then does it really make sense for you to go that deep? Because you don't understand how deep that nuance would be. What will be the process of it? How will you streamline it? And until you have that complete understanding, you won't be able to do justice to it.
So how did you build this integrated supply chain right from cocoon to fabric to apparel? How did you manage? Because the kind of stakeholders at every leg are very different, and we were talking about unit economics. How did you create that unit economics across the value chain?
See, our value chain, textile is not a new space. Textile has been there for time immemorial. Basically, roti kapda makan ki baat ho rahi hai na. हम रोटी और कपड़े की बात कर रहे हैं. So, textile has the genesis in the humankind, and our brains are attuned to that. Whole aspect of creating unit economics for yourself and by being the enabler in the ecosystem rather than being the production guy yourself requires for different problem statements to be solved with different stakeholders. Now, you need to understand how a farmer ecosystem functions to be able to create any ecosystem for him, versus when I'm working with a Zara or any other brand outside India, it's a completely different ecosystem. Their needs are different, their demands are different, and those demand needs to get solved for. So every stakeholder has a very, very different need. And if you try and push for everything in one shot, it fails. That's where you fail. You need to start with one problem, solve for that. I understand everybody wants to do more and more and more. That's, me. I always wanted to do more and more and more. But I've also realized that once you've kind of sorted one problem statement for a stakeholder and then you get into the second, you may have a product plan for it. Think of it like a product management plan, right? You know what your roadmap looks like. It could be a waterfall model, it could be an agile model, dependent on what you want. And how's the reception in the market? If the stakeholders are receptive, you're good.
Clearly, and clarity of problem statement, something,
Yeah, I just want to carry on with what he said, and that's another piece of advice that I have, and where I see things going wrong is when, say, people who are not exposed to agriculture, they treat agriculture as just one continuum. To me, agriculture is a component. So if I take every single crop is unique and different, right? To me, I equate agriculture to sport, and then hockey, cricket, football as separate games altogether, right? So it is important that you don't start believing that you've succeeded in one value chain, that you can simply extrapolate that. It does not happen. Each value chain of every crop is so unique and different that it foxes even some of us who've been working for 100 years in some of the value chains. That is one. And the second is, another thing which people have is that I'm going pan-India. भाई मेरे pan-India की ज़रूरत नहीं है, ठीक है? India is large enough, right? So if you're working in Andhra, buddy, focus and become a champ there. So several people fail because they believe that one state can be extrapolated to all the states. So my advice is just don't try and do it. You're not going to succeed. The dynamics is so different. And I come in from a FMCG perspective in IDC. The way we sell biscuits in one place or the way we sell cigarettes or various other products that we sell is so different. The ecosystems are completely different that just don't do it. So when you look at crops, please look at it at a state, at a district level, and look at a single crop and solve by crop value chain by value chain.
Great, Sanjeev. So if you play hockey, don't try your hands at football, right? If you play hockey, don't try your hands at football. Great, no, and that brings me to the last question, and this is to the three founders on the panel. I think the way AgriTech has reached this far is largely attributed to the very strong ecosystem, right from the incubators, accelerators, and investors, and a lot of collaboration between startups. You know, and since I invest in deep tech, fintech, I don't see that bonhomie in some of these sectors as I see in AgriTech. You know, startups working with each other. So if you have to ask for one thing or one support from ecosystem, and you won't find a better audience than this, what could be that? You know, how ecosystem can support you? I know you all are matured and sort of arrived in some ways, but how ecosystem
What do we need as support?
Sorry?
Is that the question? What do we need as support?
Yes.
For the entire ecosystem,
Yeah.
how do we come together? I think if you know your genesis better, right, your foundations, like if I look at Resha Mandi myself, then we are in a B2B commerce business, right, period. I have a fintech arm that's basically enabling it. But do I want to ride a NBFC tide myself? Probably not. Probably I'll tie up with a bank or an NBFC who does the better job of underwriting people. Or a similar story with our IoT devices, right? So though there is an IoT device that we've manufactured ourselves, but the second part of the IoT device which we wanted for the farmland, Fasal is doing a better job at it. Why should I do it? I would rather collaborate, right? So
great.
The collaboration has to happen.
Great. Wonderful thought. Anand?
Mentioned about hockey. So I just take an example of Belgium. Belgium as a country took a target in 2004 that in next 20 years they will be Olympic champion, they will be world champion, and they will be Euro champion. They did that in 2022 by winning the gold in the Olympic. So as he made that, one thing may work in a particular state, may not work in the next state. When personally, our experience of handling products for ICICI Bank on a nationwide basis has given us this learning, which has helped us to structure things. Same thing is expected from the ecosystem, that Agri is, though our core competency, but will take time. It has to be looked from a 10-15 year type of a horizon to build up businesses. It will not be like the other e-commerce or platform business you take and you can do it, and it will take time to build up those.
Clearly, so you need patience. But I must tell one thing, for Flipkart to give a mega exit, it took 11 years. So we're not doing badly, So people say you need more patience.
Take more. See, the point here is that the song na apna time aayega. So Agri's time has come now. Where focus from the investors or the ecosystem has come in now. So we'll have to let it mature before we write it off or we expect too much out of it right now.
Okay.
That's all.
So you have to be patient, yeah. Mukul, last word with you.
So agriculture is way more complex than we understand, right? So the number of use cases are so many, right? Like as Rangi sir said, like, you know, there are so many use cases, every crop is different, everything is different, right? So one thing, what is more important, like, you know, there are so many companies which are coming out now. They have to collaborate among themselves to make sure that we are solving for the ecosystem at large. Like we are solving for B2B trade, right, in agri inputs. That is just one use case, and something similar, there are like close to 15, 20 use cases out there, right? Now, the most important thing is like, it will never be Flipkart versus Snapdeal sort of story here, right? The one guy will.
Sanjeev, go ahead. Yeah.
Just one last
Sure.
comment, because see, when you talk about ag tech, and you talk about the tech part, normally people tend to understand AI, ML, data analytics, but I think there's far more to it. I think Mark did refer to it during his conversation. I think I am also looking at tech at the science level, at the soil science level, at the seed level, and similarly at the preservation level. I think those are parts which are missing. So if there's any organization working in that, I would like to support it. And yes, there is climate aspect coming in and we are observing it. So how do we do seed development in half the time or 1/4 the time in which it is happening right now? How do you use the latest fields of science to perhaps expedite that? To me, that would be the next interesting frontier to solve.
Can't agree more. I think last 10 years was more about channels, service, using a lot of digital tech. But I think the product play has to come in play. You know, otherwise, I don't see many models becoming sustainable. I know we have a lot to discuss, but we are constrained for time. So thanks very much for all the panelists. As Anand said, apna time aayega, apna time aa gaya hai, more or less. So let's make it large. Let's work together. Let's collaborate. I think that's the message from the panel. And thank you very much for your patience. Thank you very much.
Thank you. I think that was a great discussion. Mr. Rangras, before you leave, I've heard people call you Rangi sir, right? And I think I was so smitten after meeting him because my friends at Omnivore have been talking about, oh, Mr. Rangras is such a vibrant person, you should meet him and you should just talk to him. And I think I've experienced it firsthand. So since you've been around for so long, right? And no disrespect to you, sir. Like that's experience, I think, not age. But you've been in so many unicorns, you've seen so many big founders going right, going wrong, and still people have named you mafia, I think. Why is that? Today only you were saying that ye log mujhe mafia bolne lag gaye, and what is your response to them? To them calling you, say, ITC mafia or any mafia for that matter?
That particular word, mafia, has been used by money control for the large number of people who have left ITC and done startups. So I think it is part of my thesis of developing talent and focusing on them. And it so happens that so many of them are doing so well. And most of them I have recruited and mentored and trained. Whether it is the OYO, whether it is the Zetwork, whether it is the urban company, we got several such startups. And so if you're looking for talent, please come to me. I'll help you out and pro bono, no cost. All right, thank you so much.
And I think if you have to become a startup founder, you should join ITC, maybe. But yeah, over to Shabodni for the next set of conversations.
Thank you, gentlemen, for a wonderful session. I'm going to do a little context setting for the next presentation. So in my hurry to start the session on time, I did not really introduce myself. As Mark said, I'm Shabodni. I lead communications for Omnivore. Now, I have no agri background to speak of, and if you have interacted with the team at Omnivore, which I did in due course of my interviews, you get, I don't want to say infected, but you get infused with this passion to know as much as possible about agriculture. And I had days between my two jobs to actually learn as much as I can about Indian agriculture. Now, I turn to the fourth estate, the press, to learn as much as I can. And our next speaker has played a valuable role in shaping the narrative of Indian agriculture with his insightful commentary on the sector. Harish Damodharan is a senior fellow at the Center for Policy Research. He's a journalist with nearly 30 years of experience as a field reporter and editorial analyst with the Press Trust of India, the Hindu Business Line, and the Indian Express. Currently, National Rural Affairs and Agriculture Editor with Indian Express. His work and areas of interests include the farm sector, macroeconomics, business, and social history. We are truly honored to have him with us today, and I invite him on stage to talk about evolving opportunities and policy landscape in AgriTech.
Yeah. Thanks, Mark, for calling me. I know that I mean, I don't bring any money here, so I don't have much to offer here. And I think Mark wanted me to speak something on the policy, environment, the evolution and all. I just thought that, I'll focus a little on, some of there's a lot of structural transformation which has been happening in the last, couple of decades, and some of which has actually stalled, if not reversed, okay? And I think it's useful to know what are these things. So I think I would say that there have been these four drivers, which has influenced agri and rural in general, okay? The first is what I call, basically your dietary diversification, okay? These four things, okay? Not able to move. Yeah. Yeah. Yeah, so this was something which was happening for a long time. You move from basically calories to protein, fat, and basically vitamins and minerals. Okay, so that is what is happening with, this is what is happening. And there is a lot of evidence from various rounds of the NSSO surveys, the household consumption expenditure surveys, showing the diversification of diets. Okay, and so you can see it, for example, these are the various survey rounds. Unfortunately, we don't have any data after that. We have absolutely no idea how much milk is being consumed, how much edible oils is being consumed. I don't know, whenever I meet anyone in Niti Aayog or anybody, I said, how do you do any planning? There's no data. We don't know what households are consuming. But here, you can see what was happening. You see both in rural and urban areas. You can see how, your cereals was coming down, and you see how, like for example, milk, you see, especially this is basically proteins, you see milk, you see eggs, fish, chicken, and this thing, and of course even fats, then even vegetables and fruits. This is very clear pattern which was happening, which I think was one of the parts of the structural transformation, basically the dietary transformation which was happening, okay? Both in urban and in rural areas, okay? The second, and this was linked to, and basically this is being driven by two things, One is rising incomes. I'll come to that a little later. But the second thing is the production technology. I know this is very different from the kind of technologies which are coming. This has nothing to do with digital. But what was happening, like especially hybrids, your in vegetables, for example. Vegetables, I think today about at least about 75% of many of your vegetables is based on hybrids. It's all private sector hybrids, tomatoes, chilies, okra, cabbage, cauliflower, cucumber, capsicum, everything. And you see, for example, what tomatoes have done, like tomato yields today are, something like 30, 35. There are farmers who get even, say, about 50 tons per acre. That's the kind of yields, whereas the best paddy farmer won't get maximum, say, about 3.5 to 3.6 tons an acre, whereas here we are talking of, 45 tons, 40 tons. That is the kind of yield you get. And plus, when you see, there are farmers grow 2 crops at least, 2 crops of tomato, one during the rainy season, Kharif season, then also in the Rabi season. Then I've seen in places like Kola and, Junnar, which is near Pune, and Sangamner near Ahmednagar, where they even take out, summer tomatoes. 20 years back, this was not there, 20, 30 years back, we used to never get summer tomatoes. Right, and because I remember when I came first to Delhi in summer, we used to get hardly any vegetables. Whereas this is something which has changed a lot. I would say that it has been driven basically definitely by genetics, breeding. Same thing, you look at maize, for example. Look at what Bihar has done. I mean, it's tremendous. I mean, in terms of the Rabi maize yields, the yields are, there are many farmers who get, 5 to 5.5 tons per acre, which is higher than what you get in Illinois or Iowa or Indiana, right? I mean, so this again has been technology, private sector led kind of a thing, and of course we know about tissue cultured plants in banana. We know what gene irrigation has done, how they combined it, and of course crossbreeding, AI. Of course, this is not artificial intelligence. This is something more interesting. I mean, insemination. So yeah. So so I would say that these are the things which have happened. I mean, this technology I understand a little more than digital and this kind of a thing. Whether to do with agronomy, high density cultivation. And even these things like water soluble fertilizers, which again, so I've tried to divide them into, what are the kind of things which have come, which have increased your production, on the supply side, and the demand side is, of course, your rising incomes, And I think the other big thing which has happened is the infrastructure. The infrastructure today compared to what it was, say, 20 years back. I mean, in terms of, 3-phase power, like what it has done. Like for example, earlier, for example, when you take, say, dairies, the milk had to arrive in the dairy by 11 o'clock in the morning, because otherwise, it would go sour, right? So, but today, and that means the farmer had to start milking at, 5 o'clock, because then it is collected at the center, then it is brought to the dairy. But today, with the bulk milk cooler, there's no hurry, And earlier, the farmer was also constrained, right? I mean, he could not keep that many cows or buffaloes, right? Because he had to deliver, because the milk collection, the society, the tanker would come, by 6:37, right? Whereas today, what for example, just a bulk milk cooler has done, say 1,000 liter, 10,000 liter capacity in the village, right? It just chills to, say, whatever, 4 degrees in say 2 hours, 3 hours, right? And that simple intervention, you just think of what it has done to farming. Your herd sizes have gone up. I think this has been a great innovation which has happened in the last. So I would say that all these things, I have seen the results on the ground. I don't know about digital. I don't know. I mean, I'm totally ignorant about that space. But I can say that this is real technology, real. I mean, it was. I don't know whether it was called AgriTech at that time, but I'll say that this is something. These were truly disruptive, and these happened in the last, just as I said, in the last 20 years. And you see, so you had dietary diversification, and this was accompanied by cropping diversification, you know. So you had, because consumers were buying more, you know, proteins, more micronutrients. So you see how the production went up, you know, like in the case of milk, fruits, etc. You know, production has tripled, you know, and you look at chicken, you know, and this is the data. So you see how, you know, I mean, poultry meat, you know, 9 times. I'm talking of a period. I'm not taking the recent period. I'm just talking what was happening, you know, earlier. Okay, and whereas your sugar and cereals, etc., they were hardly increasing because farmers were producing. This was market-led demand, you know. There was higher incomes, and higher incomes were stimulating more demand for proteins, fats, and micronutrients. So therefore, and the farmer was responding. And how was he able to respond? Because technology was there, because you had hybrid seeds, you had, you know, so I think, you know, you had that entire virtuous cycle which was playing out, you know, and how, you know, your farming was getting more diversified, you know. There was more cropping diversification happening, more diversification of diets, okay. So, and you see that the production response was the strongest in crops where you had technology, where private enterprise came, you know, and you had supportive policy. There was nothing when it came to, say, oil seeds and pulses. So when the demand for vegetable proteins went up, it was met entirely by imports. When the demand for more fats, right? I mean, people wanted to eat more fried food and all these things. It was basically being met by imports. So this is the second part which I wanted to. This is the third part, you know, which I wanted to look at. You know, how rural itself has diversified. You know, so I think many of us have been talking about farmers. I don't know, some 150 million, 100 million. Whereas what I have estimated is that there are not more than 40 million people whom you can call as real farmers, you know. When I say real farmers, it is basically those households who are deriving at least 50% of their income from farming, okay. So actually the number of farmers are much less than what we think. You know, everybody says, even politicians say that we are farmers, okay. We know that, so whereas when I say farmer, it is someone who's making his or her living from the farm. So I would say that even if any startup is looking, you should not start off with the assumption of 150 million and, you know, and this thing. No, let the target be more humble, you know. Let's look at the 40 million people who are living, you know, for them it makes a lot of difference. So I say that even things like MSP, agriculture policy should be directed to these 40 million people and not to, you know, 150 million, which doesn't make sense at all. Okay, and I'll say that we need to move more and more people from the farms to, you know, the sectors where the productivity is higher. So, and actually this was something which was also taking place, you know. So you see how the fall was happening. This is that calculation which I did, you know, where I said that in Karnataka there are more serious farmers than, say, Kerala or Bengal or, you know, where people are actually earning from agriculture. So this is a thing. Yeah, so you can see how the share was falling, you know, from 64.4. You see the real fall took place between 2004-05 and 2011-12. It's a huge drop. And then again it fell. You know, last 2-3 years, you can see this is the reversal. So that is the point where I want to come, you know. I think we are seeing a stalling of the structural change which was happening, you know. It is either stalling or it is reversing, you know. So it's very clear that people don't have, I mean, household budgets, I believe, are not in a great shape. Okay, I don't think there is going to be much demand for protein foods and that kind of a thing. It's not I think the best evidence of that, yeah, as I said, dietary diversification is linked to incomes. The moment your incomes rise, people shift. So I think the best indicator is milk. You look at how the milk and dairy, you look at how the share goes up, with incomes, and you see how cereals come down. Okay, so basically that was what was happening, and why was it happening? Because your wages are increasing, because rural wages, because basically that is the real bottommost rung of Indian society. When they are consuming more, that is the one which is driving the demand for, proteins and here. You see what is happening, how your rural wages were growing, and how they have now come down. Okay, so I'll say that the real challenge today is how do we bring back the structural transformation which was happening in Bharat, okay, which was characterized, as I said, you had dietary diversification, you had cropping diversification, you had the percentage of people coming down from farms, okay, and it doesn't mean that so even when you're generating jobs, it need not be on the farm. It can be off the farm, right? It can be linked with agriculture, right? It can be in processing. It can be in logistics. It doesn't mean that, so even people who are moving away from farms can have to do with activity, with farm-related activity. So that is what I've been saying. So I think this is my overall this thing. Now, what is it? What is the kind of disruption which I am looking for? Okay, I believe that the ones which I highlighted earlier were huge disruptions. I think one disruption which can definitely happen is, if farmers are paid for the quality of their produce. I think that's something which I had discussed with Taranjeet. I think that is something, if we can bring, what Korean did in milk, right? I mean, farmers getting paid not just on a per liter basis, but also for the total solids in the milk, right? So on a similar way, if you have, say, APMC mandis where, farmers are able to, where you have proper, the quality assessment of produce takes place, based on, objective criteria, not subjective, whatever. I think what Taranjeet talks about is, whatever, eyes, nose, and tongue of people, right? I mean, it has to be, so the farmer should be able to bargain, right? When the farmer comes to the mandi, he should be able to tell with conviction, look, my soybean has so much of oil content, right? This thing, and he should be able to challenge the trader, right? I think that is where a lot of disruption can happen. If we are able to harness, whatever, computer vision, machine learning, spectrometry, etc. If you are able to use that, I think that can be a truly disruptive innovation, much more than I think buying and selling and platforms. I'm not very, I mean, personally, I'm not very impressed with those. Whereas I'll be very impressed with these things. And then I think also there's a lot of scope for digital extension. Working, I think, on farm interventions, I think there's a lot of scope for, even digital and this kind of a thing, yeah. Sorry, I hope I haven't taken too much time. Yeah, thanks.
No, we're not done. Harish ji, it's a pleasure having you here.
Thanks for calling me.
I don't know if everyone reads Harish's column in the Indian Express, but if you work in AgriTech, you need to. Rural journalism in India has been, what's a nice way of saying, gutted in the last 2 decades. Harish is probably the single best rural journalist in the country, who does a fantastic job penetrating what is actually happening on the ground explaining the complexities of agricultural policy. He understands what's happening in Krishi Bhavan. He understands as much as anyone can. And he translates that to all of us, including those of us who've worked in the sector for decades. I am a super fan. And I just have a couple of questions for you based on what you presented. So just very quickly, I love, everyone here talks about 130 million farmers, and you are basically rubbishing that and saying, no, it's about 40 million. But when I look at some of the data, for example, where it shows that in Kerala it's like 1% dependence, right, which is probably 99% remittances, those are still farmers. It's just the composition of the income, right, has changed. If I look at my own, country, both Canada and the US, right, there are plenty of people that work in Chicago but drive from a small soybean farm, right, in Illinois. So how do we think about this, right? Should we only be focusing on full-time farmers, or do we recognize that this is a natural evolution?
No, first we should disabuse ourselves of the idea that, agriculture is only 18% of GDP, it employs 60%, 70%, all kinds of, that's not the case. It cannot happen, it is simply not possible. So we need to look at people who are interested to farm. Okay, and they are the ones, I think somebody was saying, if you can contribute 10,000 rupees per acre, whether through higher income or through savings. So I think we should vastly reduce the size of the clientele whom you are trying to serve. Don't look at 15 crore and, I would say, even 4 crore, if you are able to do justice to them, I think that should be enough. So fine. Smallholder, all these things. It's okay. There's nothing wrong in saying that. But we have to be very clear that people are going to exit farming, just like my grandfather did, right? Now there's no way I'm going to do farming. Maybe I don't know, maybe hobby farming or something like that. But we need to be very clear that agriculture is like any other business. People will specialize, and whatever, comparative advantage, the whatever division of labor, and we should base it on those principles. So, I don't believe in a scheme like the PM Kisan, giving everybody 6,000 rupees. I would rather prefer to give to those instead of whatever 12 crore people, I would like to give to 4 crore people. Then I can increase it. I can give everyone, say, 10,000 rupees to those people. Yeah, only those who are serious in this thing, they should be. Yeah.
One last question from your superfan. So you showed this stall out, right? That seems to have happened in 2013. Was that? That was the peak, right? And then it kind of. How much of that rise was just Narega, right? Or was it something more structural related to the last commodity boom, right? And will that come back, because we're also kind of in a bit of a, how do you see that period, and what we can learn for restarting that?
I think that was clearly what you're saying. It had to do with the commodity boom itself, right? Suddenly, India became a huge exporter, and that maize kind of, maize, everything, and I think that was precisely the time when the private sector, many private sector players were coming in. I think it was a combination of many things, and it's almost like how the manufacturing, how China rode the manufacturing wave, right? So we have to be prepared for the fact that you may not have that kind of thing today. Like today, definitely, yes, your prices are good and all these things, but the fact is we have to recognize that there have been a lot of scars from whether it is COVID, whether it was GST, whether it was demonetization. So I think it will take some time for household balance sheets to be repaired in India, whereas the household balance sheets are much better in the West and compared to India. Yeah.
Social stability in the West is not great either. Yeah. Anyway, it is an honor and a privilege to have you here, sir. Thank you very much. Let's give him a hand, folks.
Thanks.
The Harish Damodaran Mega Fan Club is very happy today. Okay, so now we move on to the next panel. 10 years ago, the current wave of agri-interventions would have sounded something like sci-fi. Yet, here we are today with AgriTech Mavericks taking on complex challenges that have plagued Indian agriculture for decades. Technology is not just boosting productivity and solving legacy issues, but entrepreneurs are molding it to fit the needs of the stakeholders. The next panel brings a wealth of experience around the advent of technology into agricultural value chains. This panel features Dr. Sheetal Somani, co-founder and chief growth officer of S4S Technologies, Shashank Kumar, co-founder and CEO of Dehat, Alok Talekar, software engineer at Google India, Taranjeet Singh Bhamra, founder and CEO of AgNext, Ranjit Mukundan, co-founder and CEO of Stellabs Technologies, and Vamshi Reddy, partner at Kalaari Capital. Please make your way to the stage.
Thank you, Suborni. Please. Before I get started, this is just great, amazing founders and companies over here. I just wanted to start off with something which, when I actually was an entrepreneur and was switching sides from being an entrepreneur to a venture capital side. So one of the things that really, really excited me is agriculture, for the sheer reason that, I was always a believer that technology is a big disruptor in any particular sector. And when I looked at Agri, and of course my father comes from a farming background, but what I realized is my parents used to own like 50, 60 acres of land, but when I actually got educated, they were left with none. They had 0 acres of land. They spent most of the money selling lands and actually funding the education for me. That's how bad it was, because they were not able to get the kind of value from the land which is required. So I always, when I came back to this side of the story, I really felt that, technology can change a lot of things. I've been an entrepreneur spending a lot of time on technology. I always believe that technology is the key driver for, kind of moving mountains and actually disrupting a lot of this. We've seen that with UPI, with e-commerce and everything, right? So I said, why not that can happen to Agri as such? And it's something which I thought is very, very simple, right? You bring in solutions, you bring in technology, you can disrupt it, you can make everything work. But I was not convinced, so I got a couple of acres of farmland, and I thought, let me put all the solutions in here. I have great solutions, great people building solutions. Why don't I try everything and change the farm economics and make this model work? If I can make this work, I can make it work for everyone. It's been a year and a half. I've just been losing money every month, tons of money, and I'm still figuring, hey, what am I doing wrong? Where am I going wrong? Then I visualize what ideally it should be, how it should work ideally, right? So I'm saying it's very simple. Okay, I need to go and start figuring out what to sow. How do I sow? Which means I need some expert advice. Okay, I said, let me get some advisor, right? So I found someone and said, hey, what do you think I should sow here? He said, I need to go check the soil first. Okay, I said, okay, I have a company. There's some great company, he'll tell me what to sow here. So I got some great founder to come and tell, hey, give me something about the soil. Tell me, I have no clue what I should sow here. So there comes a soil report. Unfortunately, the soil report doesn't tell me clearly what I can do with this land. It just tells me, okay, what is there in the land, which of course is Greek and Latin for me, but it really doesn't tell me, okay, this land, you can do this, this is the kind of productivity you can get, or whatever it is. So I ended up kind of saying, okay, fine, this is what it is. So then my farmer sales tells me, okay, you need to get great inputs. So I went to the market, I went to the retailer, and I said, okay, give me some great inputs for, bhendi. and there's no quality inputs. I have no clue what that quality means. So here was the case where every part of the value chain was a challenge for me. I got the output. I'll not cut short the story and get to the final conclusion. I got the output. I said, let me go sell at the mandi, because I thought it's easy to sell. So I took my produce. I put it in the car. I think I got like 50 kgs of bhendi or something. And I went to the mandi, and I was very surprised when I said, hey, here's 50 kgs. First of all, he was laughing that some guy came and got his bags in the car and trying to sell here. He offered me 1 rupee per kg. And I was like, what? Is this real? And of course, I've grown from there and matured to actually selling it at 1,500 rupees now. So I've learned the ecosystem the hard way. But here we are, all of you guys, and that's why I'm not going to talk. I'll let you guys talk about what solutions are you building. And my primary thing is that what kind of solutions, whatever solutions you're building, how are they building for achieving scale, right? I think that is very important. How does it get to a farm unit level where a farmer like me can adopt this technology and scale? I think that's where the intervention needs to happen from every aspect. That's what my feeling is personally from actually being on the farm and doing things. So I'll let you guys talk about what exactly each one of your solutions is and how do you look at each one of you solving for this at a larger scale. So maybe we can start with Sheetal, and would love to hear about S4S and how do you think you fit into the value chain and add value to this?
Actually, when we started, the starting was like post-harvest losses. And India is the second largest producer for fruits and vegetables, and still 30 to 40%, which is a recorded number for the post-harvest losses. And when we dig down into the losses, we understood that majority of the losses are happening at the farm level. So we developed a technology to increase the shelf life, which is suitable or accessible or affordable for the small scale farmer to increase the shelf life of this produce. And technically we dried more than 50 to 60 products, and we realized we can increase the shelf life of these products, keeping the nutrients intact for more than a year. So that's how, like when the farmer wanted to sell the product, they increase the shelf life, and afterwards whenever they get the good value, they can sell the product.
Of course, you were on the forefront of innovation from IoT and technology, so.
Yeah, so don't blame us for that, because when we started, I had no background in agriculture, so only technology. In fact, as a communications engineer, building telecom stack, so when you look at any portion of agriculture, the first thing that comes to your mind is, what tech can I apply here? That's not necessarily a good thing to do, because there are much more fundamental problems that the farmer has. As you said in your own experience, and I think Harish in his presentation, there are much more one-on-one problems that the farmer faces. But that said, what we essentially tried to do was pick one crop. We picked milk, which is probably the biggest crop. And for that one crop, how do you solve for productivity, quality, and traceability? And for us, one good thing that happened for us was that we were sort of building on top of some pioneering work already done by folks like in Amul, Dr. Kurian. They've already solved for the market linkage problem to some extent. The notion of quality was at least trying to measure the total solids in the milk. So we said we'll probably try to take it to the next level, right? Quality need not stop at just measuring the total solids or the fat and proteins, but you could actually measure many more other parameters. So how do I solve for productivity, quality, and traceability for milk? Number one. And number two, the key stakeholder, which is the farmer and the animal. How do I use tech to make sure that at the farm level, the productivity can go up from an animal point of view and from an overall farm throughput point of view. So, and our notion of tech was not only about developing an app and then using that app to say what else it can do. So we had a hardware design team. That's quite unusual for a startup. Nowadays you have EV companies, you have companies in the battery space having hardware, but when Mark and Jinesh first visited us, we were actually tinkering with a bunch of soldering irons with, trying to build a Fitbit for the cattle, right? Those days you had only the American companies and the Israeli companies doing it, but then no, we could do this as well. So we said, let's put a Fitbit on the cattle because it helps you monitor the cattle better, because that's fundamentally the initial source of milk. And in the Indian villages, a lot of ID manipulation happens. So how do I uniquely identify animals using facial recognition? Because back then, facial recognition was only applied to human beings. And that's important because if a bank is trying to give a loan to a farmer, and that's a cattle loan, what if the cattle ID changes? You can actually sell the cattle and say, show some of the cattle and say, that's your cattle, right? So ear tagging has its own limitations. So we said, no, we should solve for that. If you want to do a cattle insurance, the cattle insurance premiums are so high, the farmers don't like to do cattle insurance. So we said, let's do facial recognition. The farmers also need a lot of other inputs. A dairy farmer does not just produce milk, he also produces a lot of other things. So he needs inputs. And luckily for us, we've been very hyper-local in the village because you can't collect milk like you collect other crops. You need to collect it at the village because it's highly perishable. You can't collect it at a taluka level. You need to collect it at the village. So that sort of gave us a very hyper-local presence at the village. And we said, okay, what technologies can I do? What advisories can I give to the farmers? Similarly, can we do grading and pricing and convert milk into currency? For instance, we said if milk should be money, right, in real time. It should not get, he should not convert milk into money after a gap of 15, 30 days. When you go to Mandi, I don't know when you got paid, but farmers typically get paid 30 days, 40 days, 50 days. So how do you convert milk into money in real time? In fact, the term MooCoin is trademarked by us. So, right, so we said, look, we could use blockchain, could whatever, but the fundamental idea is when the farmer actually walks in with something white, which is milk, he needs to see a jingle in his bank saying that, look, the money has been credited. Right? So the idea was, first step, how do I get a highly analog supply chain online using hardware, using data hooks? And once you have the data, how do I sort of then solve for productivity, quality, and traceability? So that's sort of at a broad level how we went about it, but yeah, a lot more gory details under the hood.
Hello, can you hear me?
Yeah, maybe louder.
Go ahead.
No, please go ahead.
Yeah. So I'm Alok, I work at Google, and I'll just give you a brief intro about what our team is doing. And Manish will talk a lot more about it in the next session. Google has a whole bunch of interfaces, search, assistant, YouTube, but these interfaces are probably not going to be decision points for farmers. And so the way we see ourselves helping the agricultural ecosystem is by helping the players where decisions are going to be made. So where farmers get loans, where farmers get subsidies, where farmers get sort of connected with buyers, sellers, other players like agricultural instruments, inputs, things like that. We feel that when it comes to AI and machine learning and these kinds of technologies used in the geospatial domain, being able to allocate resources in a much more efficient manner, where decisions are taken in very deeply data-driven manner, just like I think other panelists have mentioned before this, is it's really, really funny that all of us need to eat, and we need to eat until we die, but we still haven't figured out how the economics of this can work. And this is a profession that has been around for a very long time. And so we feel that when decisions can be taken in a much more data-driven manner, we can have much more benefits that can be accrued by farmers. And our focus has been purely on the geospatial side, primarily because
IoT and drones and all of these things are deeply important, but farmers are very stretched, and there is no, there isn't enough there for it to be scaled everywhere. There may be certain crops, certain ecosystems where this might work. And so I think, satellite imagery, for example, is on this Moore's law curve where it's increasing in quantity and quality and falling in cost. And so if you're able to derive more and more information, for example, if you wanted to do soil tests, what if in many years down the road, if you could get a soil report purely from satellite imagery, things like that. And so there's interesting components of research and interesting components of using existing geospatial data better. And so that's our primary focus is, can you do things at near zero cost at scale using machine learning and AI? So yeah, thanks.
Keshav, can you just make sure that we are getting a lot of noise, and can we just increase the volume a little bit? Thank you, Alok. Taran?
Thank you. I think I would like to echo the words of the three great sages here who told something, and I think that would clearly relate to what Agnex is doing. Like Heminder said that, in 1994 when he graduated as agriculture engineer, it was very difficult to, find a fit. I also graduated as agriculture engineer from IIT Kharagpur in 2002, 8 years later than him. And a similar situation existed during that time that, as Rangraj said, that agriculture is a sport, not a game. In the corridors of IIT, I used to, run around various departments from soil sciences to farm machinery to data ingestion or computer applications in agriculture, way back in 1998 to 2002. But I could never find something that has been really applied at scale. And when in 2002, I met with that reality, for me, it was meeting that reality on the ground. And that's how I spent 3 years, on the rural side from 2002 to 2005 to understand where exactly we are not scaling technology. And apparently, 11 years later, when I came back to India and started AgNext, I had built my thesis that, we need to build something for the world, as Mark said today. That, you need to build something that can scale for the world. We have a responsibility. So the idea in 2016 for me, when I came back to India, was data. How can I build something, because data is much more omnipotent and I would say omnipresent, to unlock the value. And if we can make things more objective from the subjectivity that agriculture travails are today, can I shift towards a more objective science of agriculture? And I think that's where my real journey started, that understanding that, any transaction can happen and data can build two solutions in the agriculture value chain. One, on the pre-harvest side, where the biggest unlocker is yield. So can you increase yield using data? That is very multivariate. You have weather, you have soil, you have multiple data points in order to even create an output increment of 2 to 5%, or even let's say 10%. The other data point that exists on the post-harvest side is as simple as that, pricing. As you said, from 1 rupee to 15 rupees you went. Pricing is the most important unlocker, data unlocker, value unlocker in the agriculture value chain. And that was the realization for me that whether should I create a more multivariate data application or something which is solvable at multiple point of sales globally. So the genesis was that, any transaction that you do is around quantity and quality. And these two axes converge at pricing. at what quantity, what quality you're buying. That pricing is entirely subjective, and this is where the whole data science applications of computer vision and spectral, etc., came with the idea that can I digitize it? If I can digitize it, then I can actually control the transaction. If I can control the transaction, I can move into the point of sale. If I can move into the point of sale, I can create much more better solutions for, better procurement on the post-harvest side. And that's how the whole data sciences evolved from Agnex, from a very simple, quality evaluation to where we are today, where, what I would again to quote Rangras here, that, you cannot build any platform without trust. And that is what his understanding over 40 years, and I took it away from him. So the idea was that 40 years, you cannot, a company like ITC or any large organization, trust is the most important part. And if we can build data sciences around trust, which is basically quality being objective, which is basically being technologies which can create the procurement at a much larger scale globally, where you can unlock values easily from a 5% to a 30%. And that is very, very evident for our use cases that we have done over the last 4 years at multiple points in the supply chain, that our value unlock is starting from 2% and going to even 30%. So I think that's what is we have realized, that we will never charge a farmer. We'll create something, which always goes into a point of sale. And it is very evident need of a buyer, whether it is inland transactions, whether it is, transactions in 200 countries or between 200 countries. So I think that's how Agnext was very, very firmly focused on building something for 4-5 years in technology, and then scaling through commercialization with a very focused approach of everything revolving around pricing and quality. So I think that is what we do.
Thanks for having me. So thesis of Dehat is mostly around the fact that most of the Indian farmers are small, and building economy of scale at an individual farmer level is very difficult, either for them or for any of the agri businesses with any kind of offerings, whether it's related to input or output or financing or insurance or whatever. So that's how it was all started. So Dehat is all about bringing everything related to agriculture under one roof for smallholders or Indian farmers, so that whichever crop they are growing, whether it's horticulture or staples or pulses, how they can get access to better agri input, better market, better technology, customized advisory, financial services, and that kind of vision we are chasing. The second thesis or learning again we had during our early days, that because of the same reason, just the information exchange is not going to work here. Why? Because the entire last mile is broken, right? I mean, you can exchange the information to any input company that this farmer probably needs one packet of corn seeds or vegetable seeds or soy for market or anything. But again, since the entire last mile is broken, so the entire execution is not possible. So these are the only two things what we have been doing at Dehat, essentially aggregating and digitizing the last mile, so that agricultural businesses can interact, can transact with farmers across the value chain, across the crop. So it's a crop agnostic, it's a service agnostic platform. So effectively, whether you are talking about hockey or football or cricket or baseball, we are just trying to build a physical or digital platforms where all kind of stakeholders, whether you are a player or a coach or a sports club, you can come and you can have a concoction. The thesis around scale is mostly based on two facts. So one is technology. Why? Because it's a strong enabler. If you want to do so many things, then obviously because of technology, because of data, it's possible, because it brings a lot of efficiency, it brings a lot of avenues of integration. And so that's the technology. That's a different fact that when we started, then this was not the thought. We started in 2011 when AgriTech was agriculture. So one is the technology which we learned over the years. And again, I think we made ourselves capable so that we can invest more and more in this piece, because again, we have been seeing the advantage of implementing technology in their entire execution. So one is that. But the model-wise, I think the thesis is the scale-up philosophy is more around going deeper and deeper and deeper. So having a very strong geography focus at any given point of time. So that's why at any given point of time, in fact, let's say we pick one geography. And when I'm saying geography, so in context of the heart, obviously it's not state, it's just a district. And then go deeper and deeper in that district across all the touch points, whether it's any of the agricultural touch point. And then basically again reach to a certain level in terms of onboarding or acquiring certain percentage of the farmer's household, or maybe tapping the certain market share of the entire agri economy, or whatever it is. And then there is a certain point of inflection, and then before we talk about new districts or new state. So yeah, that's the scale-up philosophy.
Thanks, Shashank. So one thing is, obviously, one of the things I keep seeing is everyone wants to do a full stack, right? I mean, is that the way to go? Because, I see that there's a lot of experimentation within the value chain where, the entrepreneurs start and see that, hey, let me try to solve for this problem. And then they see that maybe it's because of venture capital interest or the funding interest or the economics not working or whatever it is, but they go across the value chain, right? And some folks decide that I'll do the full stack because that's the only way to solve this problem, right? So how do you look at it? Because I know you guys do full stack in a sense, so your journey has been something similar. So how do you look at and say for the budding entrepreneurs, is that the way to look at things? Because for me, product-led innovation would happen more vertically than horizontally. I mean, I'm not saying it won't happen horizontally, but more vertically, right? So I don't see that happening. Of course, we have Taran and S4 is doing some part of it, not some part, most part of it. But how do you look at that?
Well, so since, as I said, that somehow we had a clarity to stay focused, for the last mile, which is again district and below, means Prakhand, Taluka, Panchayat, Gaon, and hence the farm level. So we had a very strong conviction. Again, I mean, we are still pursuing the same thing, that if you really want to change the farmer's life, at least for farmer, it has to be a bundle. Whether you call it a full stack or you don't, that's a different debate, but it has to be in a shape of bundle. And largely because of two reasons. Because one, it's a seasonal activity. Let's say if you're only selling input, right? So then talking about, let's say, just one farmer household or a district, then probably it will be 3, 4, 5 months long business. Similarly, if you're only aggregating the produce, again, the things will be same for that matter. But again, that's more on the financial side or the cash flow side. But think from a farmer's perspective, as Taran rightly said, that, or maybe something what Harish was mentioning as well, right? The crop diversity or any kind of behavioral change. It's not possible unless and until there is no trust between you and the farmer. Trust for the farmer, with the farmer, it comes with touch points. It comes with more and more engagement, more and more transactional relationships. So again, there are different theories, but we had our theory that there has to be more and more engagement with the farmer's household. And why? One, because there are so many things to do in a basic manner what they have been kind of doing currently in terms of the way how they have been growing the crop, the way how they have been selling the produce, the way how they have been buying the input. But at the same time, it's just a beginning. Because like the work doesn't end here when you start providing the basic services. The actual work begins after that, when you will build that trust and as well as the ecosystem, so that probably you can encourage the farmer to change the cropping pattern, or maybe to adopt a new technology, right? Or maybe to any kind of behavioral change. So I think we come from that background, mostly because of the last mile. But yes, again, it's not possible to do everything. So that's why for any of the crop, we did not go, let's say, to a full stack path. What does it mean? That, that let's say, in fact, all right, we said that, all right, let's say we are not going to manage the end-to-end transit. We are not going to manage the secondary processing, or maybe the retailing, maybe selling directly to Kirana store or so, right? Because I think somehow, somewhere, obviously, we defined our Lakshman Rekha, that, that all right, in the last mile side, we are building a full stack. But again, when we talk about any of the subsector, whether it's input or output, there probably we cannot be a full stack, right? I mean, there, I think, let's define our limitation. So that's why our world typically ends at district level itself, right? I mean, beyond that, again, neither we take any price risk, nor any transit risk, nothing, right? So it's all to the point number one, which is going deeper and deeper in and around district. But that's our theory. It's important to have bundle, at least. So let's say maybe input plus financing, maybe input plus insurance, maybe input plus advisory, maybe input advisory plus output or whatever. But I think more than one touch point or bundle, we have our own bias to that thought.
So Ranjit, quick question. Of course, you guys have been implementing technology, and congratulations on the patent which you guys had recently got. So from your perspective, how do you see the business model around technology, right? Because obviously there's so much technology you can implement, but how do you see the farmer as such actually benefiting with these technologies without having to put up with a lot of investments in this space, right? So how are you ensuring that the business model is working across the board?
Yeah. So to begin with, when we started, it was fundamentally a technology licensing model, right? We would not touch any operations, we would not touch anything from a supply chain point of view. It was all about, look, I have built a tech stack, I have my IoT stack, I have my software, can I just license tech, and specifically for a dairy segment, right? So we were very focused on milk only, and we're not looking at anything else at that point. And then we figured that you asked the business model from a affordability point of view. The entire supply chain, it's a commodity at the end of the day, right? So the per unit economics is not that great. If you look at in a milk industry, look at a Kera Milk Union or any dairy for that matter, they probably make about 20 to 25 paise per liter as the PAT, profit after tax, right? So that's, so your tech spend for a dairy is going to be a fraction of that. So that's the reason I used dairy as an example, Amul as an example, is that you were B2B to begin with, selling tech, right? And because we figured that selling tech to the farmers directly has a lot of issues with that. How do you recover the money? How do you support it? How do you maintain it? Highly fragmented. And these are not very large farmers. We're not talking about farmers with 100 animals, 1,000 animals, like the way it exists in the West. These are smallholder farmers, 2 animals, 3 animals. So tech sale to a smallholder farmer wouldn't really work the way it should. So the unit economics wouldn't work out. So for us, when a farmer uses tech, for him tech is free. We see how to get that tech monetized in the other parts of the supply chain. Right? So then we shifted from saying, look, we can't just be licensing the tech. We need to use the tech to enable additional services to the farmer. Can we become a relationship manager to the farmer, and through that relationship enable additional services that the rest of the ecosystem renders, and then use, he does need tech, but don't charge him for it. Right? Can we charge some of the rest of the ecosystem to pay for example, can the bank absorb the cost of some tech because it helps them underwrite the credit risk better? Can the insurance companies absorb some of the cost because it helps them underwrite the insurance risk better? Can the supply chain processors, the service providers, like the dairy processors like Amul and others, absorb some cost because it makes the supply chain that much more efficient? Over time, the farmers will grow, the herd sizes will improve, the farm throughput will improve, and maybe at that point, we could probably charge the customer because charge the farmer because the unit economics would start working better. So that's how we sort of went about trying to figure out the unit economics in a very tech-led supply chain.
Look, you might want to highlight a little bit on, the kind of solutions entrepreneurs can actually leverage, right, from Google to build, in this space. So I know there's a lot of innovation happening, but maybe you want to talk a little bit about, what is it that is readily available for entrepreneurs who are building solutions at the farm level to kind of look at it and say, hey, here's the things which we can start off with.
Right. So I don't know how many people here have heard of Google Earth Engine. It has about 50 petabytes of data, data all the way from 1970s to now from satellite imagery that's in the public domain. And it also allows you to run arbitrary computations on not just geospatial data, but any.
Can I know for a particular farmland, what has been the history of crops that have been growing from image processing? I mean, I'm assuming we can do that and say from the last 5 years, these are the 10 types of crops that have been grown in this space. Can you do that?
Yes, that's completely doable. Some of the things that we are already thinking about doing at scale, like either directly or working through partners. Now, there are also concerns about how this data is going to be used. So, if this data ends up harming farmers, there may be sort of things to consider there. So, for example, because machine learning, recommending a video on YouTube is very different from whether the farmer gets a loan because of a recommendation or not, because their entire livelihood depends on it. And so when you make these predictions, how the data is being used is also something that we need to consider and be very thoughtful about.
Sheetal, I know you've been, doing some exceptional work, not just in terms of the technology, but actually empowering entrepreneurs at the village level and building solutions and a business model around it. So what have you been seeing? Whether is this business model which you guys are building with village level entrepreneurs actually kind of adopting technology and someone else kind of actually enabling that financial aspect of it to kind of leverage on it. So how do you look at that as a business model evolving at a large scale?
So actually what we are doing, we are creating micro entrepreneurs. We call them micro entrepreneurs because we are enabling them to start their own business. Or we can say we are helping these women farmers to convert their commodities into the products. And there the role of the technology comes. But when we initially started, okay, just we cannot go and say, this is my technology, you use this and convert into the product. Then the farmers, they are coming to us, okay, but what will I do with this product? The final product. So we need to help them, okay, this product can be sold in this form or the little further processing to this market. Then the next question comes, who will fund my technology? So then, okay, we need to identify the financial institutes who give the funding or the loans to these farmers to get the technology. Then we help them to process that product and convert them into a particular specialty product and then connecting these farmers to the market. So actually what we are doing, we are creating micro entrepreneurs, means the full stack solution we can say, from the input raw material, which raw material should be processed when, the funding support, which kind of products they should make at the farm level. And while scaling, what we have observed, when we create a leader or one micro entrepreneur in a village and the other farmers, they see, okay, he has done this complete thing, he started earning. So after that, all other farmers, they are coming behind us. Okay, I also want this technology, I also want to start this business. So converting that farmer into entrepreneur. And I think when they see the extra money and no losses, that is the main fundamental for the scale up.
So one, I want to just kind of because I'm running out of time. But one thing is, I always like to ask this question, right? Because there's a lot of young entrepreneurs building solutions, right? So since you guys have actually built up solutions at a scale and all that, what are the white spaces which they can actually build? Not just from an overall ecosystem perspective, but say if you take from your own perspective with what you're building, is there something which you feel are the gaps which they can actually build for, right? So within your own ecosystem or within your technology, what are the things which you can actually integrate, which they can build for? So for the young entrepreneurs, any white spaces which you think they should be working for?
I think there are many examples for that, and many entrepreneurs, thankfully, the more the merrier, are picking it up. Especially in my space, if I'm talking about, I'm talking about solving 50% of decision making of agriculture, which is quality, right? So in just this segment, there are multiple applications that can be built, not just in commodities. I'm talking about technologies like you can have magnetic resonance, you can have much more advanced computer, I would say vision applications that can be built. I'm talking about within spectral sciences, there are multiple like, surface enhanced Raman spectroscopy that can be brought in. These are just few applications I'm talking, which we can integrate in our system and actually, take it at a much larger scale together. But these are just hardcore, I would say, hardware technologies that I'm talking about. But look at what ONDC has done, right? We just all saw how they have kind of, disrupted a linear chain that used to exist and used to be owned by a composite structure. They have clearly broken it down and kind of, put it into kind of Legos systems. I think there's huge opportunity in agriculture where you own up a certain region, you own up a certain geography, and then kind of, apply multiple things and, take it as a master of that area. For example, like Sashank and, Sheetal are be working on micro entrepreneurs. They are not just, they can take a lot of these things and, apply that. Because there's a lot of gap between, what is being made and what is being deployed. So people who can build the traction, I think for those entrepreneurs itself, there is a massive market. The example ULI is coming now. So you can see, how the government had disrupted everything with UPI. Now ONDC, then ULI. These are multiple applications where you don't need to sit over a large, development and life cycles to build a stack today. Although I'm not the one who always says about full stack, because I clearly believe that this sport is so big that not everyone can actually do this entire thing. It becomes so heavy to pick or to carry. So for my point is that, think of, rather than that, think of a ONDC structure in AgTech, where, you can be a vertical owner and help to build tractions for a lot of these innovators that are building. There's a huge gap in that itself. Not everyone can. I'll give you an example. Wherein would you find VCs talking about a pharma company to, do R&D also, to do consumer and clinical trials also, to manufacture also, to do supply chain also, and to also, create a pharmacy business? No, you won't find single application in the world. But why is it expected of AgNext? Oh, sorry, agriculture. Sorry, my bad.
You're putting me in there.
There's nothing of AgNext. We are not a full stack. We are a very focused product for company. But I'm talking about, why that, that expectation is being built just because it is so large that you want to, build an application of like a Lakshman Jhula all over. No, you can't. Yeah. It's not a pharma. Even in pharma industry, just the pharmacy segment is 10 unicorn setting, right? That is what is possible in agriculture. Yeah. But, the whole statement, and I want to call it out, but I want to call it out that, building that AgTech, dream story of, everything, you do the clinical trials also, you do, extension also, you do this and you do this and we will become big. No, it's not. Just in this, we can become very big. That's what I have believed. And I think suggestion to all innovators would be think like that. There is huge collaboration sitting for all of us. And I think, yes, that's what is the story of AgTech for the next 10 years. You will see a lot of acquisitions, you will see a lot of mergers, and you will see a lot of massive collaborations. Because the rubber needs to hit the road. We have not.
Yeah. Shashank, from your standpoint, what do you see as some opportunities which young entrepreneurs can build for within your own value stack, or you see the missing gaps?
That doesn't mean we are not young. So I see for AgriTech.
You're already the poster boy, so.
No, we all are young. Even the sector is still quite young.
We are looking up
I
to
think
you.
the AgTech, it's just a beginning. It's just a beginning. So, for most of the agri entrepreneur, I'm sure this must be the common source of motivation, is the scale around any problem statement. A specific crop, a specific service, a specific geography. So still, like, I mean, lot of headroom anywhere across, whether it's again crop specific supply chain or maybe the geography specific, whatever it is. But I still feel few of the specific subsectors, I think, for which now there is a readiness, is the digital farmer services in terms of extension. Why? Because now the mobile penetration is getting better, data penetration is getting better. In fact, there is a willingness from farmer side to pay for advisory. So customized advisory, around farmers through digital interfaces, I think that is one area where, again, there's a huge scope I personally see. The financial services, obviously, it's mandated by government, but still, whether it's credit or insurance, the penetration is very low. That's another area. In general, agri-bio side, because again, globally, everyone is moving towards chemical to the sustainable ag. So in general, agri-bio side, so that, again, I think as a country we'll be self-dependent. It shouldn't be the case that, that after 7 years, 8 years, we'll realize about the net import dependency or so. So I think these are the three things, largely I see that, that I think here, when you will not see, well, I don't see even a decent start at this point of time. I think it's like just few of the players started taking early or baby steps or so. But again, that doesn't mean that all other areas where like other agri-tech companies are operating, including us, it doesn't have headroom. It's not a winner-takes-all market. I mean, it will require many more players like us.
Thanks, Sean. So, unfortunately, we are running out of time. I had a lot more questions on traceability, on deep technology and all that, but I think we'll leave that for later. But I really appreciate you guys taking the time and being here. We will collate questions and come back to you from the audience, and then try to answer them. But really appreciate you guys taking the time to be here. Thank you so much.
I think I've had 5-6 messages from people saying this was my favorite panel. The insights were amazing. I think thank you so much, everyone. And before you leave, Shashank, can I have you here? Shashank? Just a second. So since Vamshi said you are the poster boy, we need to do something with you. And I know you're going to call me cheeky. I know you're going to say that, why are you putting me on the spot? But I'm going to put you on the spot. Because this is a question which has heated up in the last 2 days. Are we going to see the next AgriTech unicorn, and is that you? One word answer will do. So my question to you is, are we going to see the next AgriTech unicorn in the next few days, and is that you?
Someday for sure.
Hemendra just told me unicorns don't matter, but we VCs have this obsession with this term. But thank you so much. I think you should get this picture changed. You look even better than that photo. I think that was some years back. Thank you so much for that, Shashank. So next up, first of all, I want to thank our partners, Google, for doing this, right? And I think when I first reached out to them and we started speaking, they have this wonderful program for young startups that they've just launched, which is an accelerator, come a boot camp that they're going to run for very early stage startups. So if you're a startup founder, do check out the Google desk, do meet Paul, Anuj, and Niharika and everyone on their team. I think absolutely wonderful people and very supportive when it comes to the startup ecosystem. And I call that out also because our next speaker is from Google, right? And again, great work by the Google team to really help us put this together. And I don't think we would be able to do this without them. So our next speaker is Mr. Manish. Mr. Manish Gupta is the director of Google Research India. He holds additional appointment as Infosys Foundation Chair Professor at IIT Bangalore. We're really honored, sir, that you've taken out time and you've flown down to Delhi for this. And previously, Manish has led Videocon, a video technology startup, and has research centers for Xerox and IBM in India. As a senior manager at IBM WTJ Watson Center in New York, Manish led the developing system software for Blue Gene supercomputer. IBM was awarded a National Medal for Technology and Innovation for Blue Gene by the US President Barack Obama, which is huge, and I'm really honored that you are here present between us for your keynote. So I please call upon Mr. Manish on stage.
Thank you for this opportunity, and let me start by acknowledging that despite this very lofty title, I'm really here to learn. So it's been wonderful listening to all of these innovators, people who are supporting the ecosystem and so on. So what I'm going to do is talk a little bit about some of the problems that we have started looking at Google. But of course, we are very, very early in this journey. And we are looking forward to, again, learning from the entrepreneurs what are some of the tough problems that they are dealing with where technology can make a difference, and hopefully collaborating with folks. Next slide. My presentation up? Okay. There are sure. So, our interest in agriculture, I would say there are two different lenses that we are looking at. One of them is the sustainability, and again, it is well known that agriculture has a fairly significant impact on kind of carbon emission, and there are various aspects. As you try to make the world more sustainable, you really need to pay attention to agriculture. The other lens that we look at, of course, is humans. And again, we all know how a significant percentage, I stood educated about the precise numbers of real farmers versus whatever people who claim to be farmers, but still it's a very, very significant percentage of the population in India which is dependent on agriculture for their livelihoods. And there is clearly an opportunity to significantly improve the life for farmers, improving their income, improving access to credit for them, access to insurance for them, and of course, better visibility in terms of the prices that they can command and so on, and various kinds of advisories where technology can make a difference. So these are the two lenses that we have been looking at in terms of where technology, again, can make a difference. Then, as we have started to look at, again, the different layers, Alok talked about, again, satellite imagery is the primary focus that we have looked at. Of course, there are other factors like weather, there's what goes on the ground, what goes underground, and so on. So we look at, again, the technology. Is any Any chance of getting the presentation up, or should I? Okay. Yeah. So, so, so in terms of our focus has largely been on what can you do as satellite imagery becomes more and more powerful, affordable, and you're beginning to see, again, even startups getting into this space. And we have started collaborating with some of them. As Alok mentioned, over the years, Google has been working a lot in terms of with satellite data and building up products like the Earth Engine. We have another effort to try and consistent with our mission of organizing the world's information. There's a significant interest on our part in trying to build models that understand the world as it exists. And understanding the world includes understanding at a deeper level the farmlands. Some of the foundational solutions that we have started working with is from satellite imagery. Can you start to apply kind of vision techniques just to even identify, for instance, delineate farms? That's a starting point. So can you, from usage patterns, start to, okay, so my presentation is up, so maybe I can, okay. So I can maybe very quickly jump through some of these slides. So this I mentioned was part of our motivation in looking at, so Google as a company has committed significant part of its investments to go into making the world more sustainable. So that's been one of the lens that we have been looking at, the human lens, and the opportunities to significantly improve, for instance, the yields of various kinds of crops, and correspondingly the farmers' incomes. And we see, again, agriculture as today ripe for transformation, with a lot of these factors like technology, where we are beginning to see, again, farmers having access to digital tools like mobile devices. Data is becoming available in terms of data usage has become extremely affordable. Remote sensing data is increasing in quality and quantity, falling in costs. And again, as we have seen today, significant rise in the entrepreneurial ecosystem. At the same time, we see a lot of challenges ahead in terms of environmental challenges. Of course, global warming playing a very significant role. And of course, we've seen issues like soil health loss and other climate change induced challenges. And there are, again, policy interventions being made to try and make it easier to move forward with some of these transformations. And as I mentioned, there are different layers that you can look at. We have chosen to focus much more on the remote sensing aspect. As you collect data from satellites, how can you apply some of these vision and AI techniques that we have been applying to many other aspects of our products? And so some of the problems that we have started to look at, as I mentioned, one of them is just identifying farm boundaries from usage patterns that you see from satellite imagery. And trying to, again, also within a farm, trying to automatically identify the crops that are being grown. There was this question raised about, could you look at all of the historical kind of data that you have from satellite imagery and identify all of the crops that have been grown? And today we know, for instance, governments like Karnataka government, every year they spend thousands of crores of rupees to simply do this survey in terms of what crop is being grown on each and every plot of land, a lot of that can eventually be done at a fraction of that cost if you're able to really apply technology. Beyond identifying crops, we would like to identify certain key activities, things like stubble burning, harvesting, tillage, and so on. And ultimately, our goal is also to be able to predict yields by applying technology. And another aspect that we've been looking at is, can you also start to apply some of these remote sensing technologies in combination with on-the-ground measurements to help understand soil properties better? And the first step that we have taken in that journey has been to understand, in particular, soil carbon holding potential of the soil. So this is again showing some of the capabilities that we have developed today from some of the work that we've been doing with satellite imagery. We have, again, one of my colleagues, Alex, who's in fact based in UK with Google in London, but he's a member of Google Research India. So in fact, when we started Google Research India 3 years ago, I had no idea that we would be working on agriculture. And it was passionate people like, I mean, one of our goals was to work on problems that really matter to India. And very soon we recognized, again, that if we really wanted to have an impact on the country, we really needed to work on some of these problems. So Alex, in fact, built this capability, and he joined our team, even not being based in India. And he's been applying, together with Alok, some of these extensions to the work to deal with additional challenges that we see in a country like India, where the plot sizes tend to be much smaller than, so it was a much easier problem to solve in the Western context. The problem becomes far more interesting, which is, again, always good news to us as researchers when there are challenges to come up with those solutions in India. And right now, all we are able to do is delineate some of these boundaries in terms of usage. One of the things that we are trying to do is to develop a better understanding of the full landscape. So what we would like to be able to do in the near future is go beyond just identifying those boundaries and being able to really classify and understand each and every aspect of the land usage, where there are trees, where there are wells, where there is some woodland, where there is a source of water, and so on. And of course, as you see specific crops being grown, we want to understand what that crop is. And of course, while we have taken some of these early steps, we see a lot of challenges ahead. One, of course, comes from the small farm sizes. Unlike some of the models that we have developed that apply for the Western world, where there are like hectares and hectares of cornfields, you have to now solve this problem for very small farms. And many of them may actually be doing multi-cropping instead of growing, and which is a good practice, instead of growing a single crop, growing these multiple crops. But how do you then, it creates a bigger challenge, right, for the AI algorithms that we try to develop. The other aspect, another challenge that we've been dealing with is things like during the monsoon season. So in fact, this plot shows that during the months of July and August, there's very little kind of signal you're able to utilize because of, again, lack of visual imagery. So how do you complement some of this analysis of visual imagery with microwave signal and so on. So these are, again, some of the research problems that we have been working on. Another aspect which we started in partnership with Nurture Farm, one of the subsidiaries of UPL, has been around agriculture carbon credits. So again, with that sustainability lens that we have, we see that good practices, I mean, some of these practices which are harmful, like tillage, excess use of chemicals, monocropping, and so on, these are not only bad for the environment, they kind of ultimately also create problems in the long run in terms of soil health and other issues that the farmers face. But often farmers are under pressure, right, to deliver more for the short term, right? I mean, so is there a way to start to incentivize farmers towards regenerative agricultural practices, even in the short term, through carbon credits? So that's the problem that we have been looking at, that if we are able to truly incentivize farmers through carbon credit, in the long run, it is also going to lead to additional benefits for them as well as the planet. Now, a big issue with trying to do this is that today we do not have any real scalable solutions. So while carbon markets are coming up for agriculture, there's a severe lack of accurate measurement and monitoring tools. And whatever measurements you do, you are today confined to very, very expensive solutions based on lab testing of soil samples and so on, which are simply not going to scale. So we have been, again, in partnership with Nurture Farm, we've been looking at, can you complement some of those soil tests that, yes, you need to do through the lab with some of these remote sensing capabilities, and can you ultimately make these, can you come up with more scalable and more cost-effective solutions for some of these pesky problems? So these were some of the very agriculture-specific problems that we have started to work on. One of the things I want to point out is that we are really, I mean, we really recognize that we are not the experts in agriculture. So we really are looking to do all of our work in collaboration with partners who deeply understand the domain, and where they bring those strengths to the table, and we bring more of our technology strengths to the table, rather than us trying to imagine that, yes, we are going to come up with products that directly benefit the farmers or other players in the ecosystem. We are really looking to partner with startups and other companies that develop those solutions, but where we are more of technology partners to them in that journey. So in addition to these agriculture-specific kind of problems that we have started to work on, of course, there are, as part of our mission to organize the world's information, there are a lot of other relevant products that we have, like Google Search, and in fact, more than Google Search, YouTube. Because YouTube, in fact, in a country like India, is a bigger source of information. And in fact, YouTube search gets much more used than Google search for people to find information. And one of the key gaps that we saw as we started the research lab in India was, again, the huge discrepancy between the capabilities of our products for languages like English and languages spoken in India. So that's another very, very key area of focus for us as a lab, that we have been systematically working on closing that gap. Starting with, of course, languages. The initial focus was on dealing with languages like Hindi and so on. But very soon we recognized that just working one language at a time was not going to work for a country as linguistically diverse as India. So we very rapidly turned our attention towards building these multilingual models, which instead of solving the problem separately for Hindi, Tamil, Telugu, and so on, can we build a single model which is able to handle all of the languages together? So our team, in fact, built that a couple of years ago, very soon after we started the lab. Within the first year of some of our researchers joining, they built this model called Mural, which handles 16 Indian languages. And in fact, that single model was used to improve the capabilities of the Google Assistant product, where you can interact with that assistant through voice. So all of the 8 Indian languages that are supported by Assistant, we were able to improve it through this Mural model. One of the things that we are now is going well beyond those 16 languages. So in fact, now we are working on building a single model that will work for 100+ Indian languages. And we have yet another project where we are looking to collect speech data together with partners from each and every district of India so that we capture the true linguistic diversity of all of India. And all of that data we are planning to put into open source so that it's not just we as a corporation that benefit, but everybody in the ecosystem. Because there are so many problems as we tackle for India. Language is a very, very significant kind of a barrier. And we want to help overcome that barrier. So with that, let me stop. And I'm really looking, again, it's been wonderful getting educated on some of the challenges and wonderful work being done in this sector by the startups, by large companies, and by the wonderful VCs. So looking forward to working with all of these different players and making our own contribution to this very, very important sector for India. Thank you.
I think Sir touched upon a very important topic, which I think we, Omnivore, so we have been discussing about climate change, carbon credits, carbon markets. It's a very important market, I believe, and something that startups will continue to explore more and more, right? Before we move ahead, right? Actually, there was one big problem that we faced while putting together this whole group of speakers and everything. While they do it, I'll tell you a short anecdote. So we really wanted more women on the panels. We really wanted more women participation in AgriTech. But to just see that there is so far and few in between is something really, really disheartening. But I hope in the years to come it becomes better. Thank you so much, Dr. Sheetal, Dr. Renuka, to come here all the way, travel from different cities and join us. And Kirti was also supposed to be here from Animal. She could not. So a big shout out to you guys for what you're doing. Anu from AgroWave, I believe, is also here. So just a small round of applause, because at Kalaari, this is a cause we really care about, right? Women participation in ecosystem. We just did a summit called the No Ceiling Summit last week. And the whole idea is to have more women founders, more women tech, more women in leadership positions. So without further ado, right, we're going into the next panel. This is the last one for the day. Thank you so much for sticking around. I know it's been a long one, but I think this is the panel where I'm looking forward to the most, because it's talking about one word that we've continuously heard today, white spaces. What are these white spaces? I think we discuss a lot, where is the real next opportunity in AgriTech? And we came to these 2 or 3 areas, which I believe is really, really going to be key in the future. One definitely is exports. I think how do startups really leverage exports, grow along? Second is how do we embed fintech in AgTech? So Agri-fintech is the other one. And the last one, right, Omnivore has done so much work in it, I think, is the biotech sector, ag-biotech. So these 3 spaces are where we see real innovation will come along, apart from all the obvious ones like image sensing, supply chains. They'll continue to do great. But without further ado, calling upon the panelists for this one, Mr. Vilas Shinde, the Managing Director at Sahyadri Farms, Dr. Renuka, Co-founder, CEO of Bioprime Agri Solutions, Mr. Agam Khare, the founder and CEO of Absolute Foods, and Mr. Hari Rajgopalan, Vice President, Capital Markets and Strategic Initiatives at Samannati. And this is being moderated by our dear friend, Mr. Shubhadeep Sanyal, partner at Omnivore. So please give them a huge round of applause. And I think this panel is also somewhat, like all panels, really interesting because an intriguing mix of startup founders, someone like Mr. Vilas Sinde, who's flown down again to talk about how startups really interact with, companies which are not really mature, I'd say, but companies which have been around for a long, long time. So over to you, Shubhadeep, and looking forward to this conversation.
Thanks so much, Keshav. Thank you, everyone, for hanging around till we promise that we'll be slightly entertaining. And guys, please have a seat. I'll join you shortly. And we won't stand in between you and drinks and dinner beyond a certain point. So let me quickly join my fellow panelists. I see some people joining us. Mora, welcome. If my voice is reaching outside, guys, last 20 minutes, we can do it. Come on. Okay, wonderful. Thank you so much. We'll give it a minute for everyone to troop back in. And in the meantime, let me, kind of elaborate on what Keshav was alluding to. We have spent a wonderful day. I'm personally very, very, humbled and thankful to each one of you to have made the time. And I guess physical conferences do have their charm. So I think it's wonderful to see so many people coming together. The point of kind of keeping this panel for the last was that we'll have the advantage of a lot of speakers before us who've already done the hard work. So we'll just stick to kind of highlighting what we think are in our opinion, of course, 3 very, very big white spaces. And that doesn't mean that we have really, kind of done a lot in others. But we definitely want to kind of spotlight these white spaces and learn from operators who are sitting next to me, who are in it, knee deep, arms deep, in that sense, and living it daily. So the 3 spaces, as I said, are kind of agri exports. What can India do to become globally competitive in agri exports? And how do kind of farmers make more money in the process? Fintech, which is financial inclusion, you can call it agri-fintech, embedded fintech in agri. And finally, kind of how does pure science and ag biotech play a stronger role than it is today? So with that, I'll kind of, move from my left maybe and request panelists to give a very brief 1-minute, 2-minute intro on maybe what their organizations do. And in addition, kind of help, let's say with you first, Agam, maybe talk about how Absolute is kind of, operating in both worlds in some ways, looking at exports and also looking at plant science in a very fundamental manner. And how do you see these two kind of intertwining as you guys scale, or the relevance of this since inception? And maybe I'll then move on to Vilasji with a slightly tweaked question around this as well. So over to you.
Thanks. I'll give you guys a bit of a context before we start. So if you look at our world today, primarily, if you go back in history, you will see that around 18th century, a big advent happened. And that advent was unraveling the mysteries of physics. And 4 people, especially, out of all, unraveled these mysteries. And then the world was never the same place again. And they were primarily Newton and Einstein, everybody knows, but primarily 2 more people, Faraday and Heisenberg. And the principles they gave led to the evolution of the cities we know today, electricity, almost everything. The world wouldn't have been like that if the mysteries of physics weren't unraveled. And the second time the world changed forever was when a person named Mendeleev, he was sleeping and then a periodic table appeared to him, and then he sort of woke up and drew a periodic table and said, these are elements in chemistry. And then we suddenly had fuels, we had pharma, we had food, we had color, cosmetics, and the world was again, we had metallurgy, the world was never the same again. And the third time the world will change like that, in my firm opinion, is when somebody will unravel the secrets around biology. And so the third time, the greatest of the companies that will be built on the pillars of biology. And so that has remained a firm belief, which is why absolute core at heart, what we do is unravel the secrets of nature, the evolutionary biology that nature built in over billions of years, and then use that biology to understand and build replacements to all chemical farm inputs and build natural bio path-breaking inputs. That's one. The second firm belief that we had since our early days was, if you look at India per se, for 1700 years, we were primarily the richest country in the world, and we accounted for about 25–30% of global GDP, and it was on back of two things. First, we primarily built the best of the agri-sciences back in the time. And according to those days, our sciences were way ahead in time. And second, we were at the cusp of commerce. So the Silk Route passed through here, and we were a great commerce company. And so the second thing that India needs to, if India needs to sort of arrive back to that point, is to leapfrog in that commerce, get into unfamiliar markets, penetrate them, and build networks and build markets in those countries. So technology from India to the world, product from India to the world. That's our thesis, and those are our business lines, and that's absolute.
Wonderful, thank you. Thank you so much, Agam. Moving on to Vilasji. Vilasji has a very, very interesting backstory, which I would love you to kind of, tell everyone. Sahyadri is one of the most successful FPOs in the country and maybe globally as well. And they've been known for their very dominant ability to play a role in India's exports. So with that kind of contour, Vilasji, what has it taken and what will it take for more, FPCs, FPOs and more companies to make India globally export competitive in your experience? And how can we ensure models like these can kind of scale up? So purely from your experience and maybe with a bit of introduction on Sahyadri for everyone's benefit.
I think the FPO model in India, still it is not considered as a commercial activity. A lot of people still they are thinking that FPC or FPO is a social enterprise, and like a traditional cooperative, everybody is looking after this concept, whether it is government or any even the farmer. So, but at Sahyadri, from the beginning, we have clear understanding that this FPC we are creating to make our farming profitable. Individually, it is not possible, because in all the panel, this point came that we need to focus on the commodity. We need a full stack model. We need a integrated supply value chain. But when we are talking at individual level, it is not going to become viable. So that is very clear because of the scale and whatever the challenges around the individual farmer. So the collaboration, which is I think is the reality of any business, that you need to come together. If you have not strength on individual level, if you are coming together and you are creating a collective strength, then you can have a solution on individual level. So with that, I think we need to think on APC model. At Sahyadri, we did the same thing. As a grape farmer, how we can come together, and how we can win in the market, whether it is in the Indian market or in the global market. And from the beginning, we focus on export with the clear understanding that if we want to get better value, better premium, so then we need to approach the developed market where we can get the premium without having any direct approach to the retailer, to the end consumer. So I think with that approach, the first 5 years we spent on Europe market just with one commodity, and also we focus on creating the complete value chain, because the problem is not just on the market side. There are multiple problems, and if you want to win the market, you also need to solve the problem on the back end, because the consumer in the market, whether it in Indian market or in the global market, he is expecting standard, he is expecting efficiency, and that is not possible if you are not having solution at all your value chain level issues.
Wonderful. So what you're pointing out is that it's also an element of collaboration which needs to exist, not just amongst growers, but maybe even from a technology provider standpoint and vendor standpoint, with the point that I think quality both domestically and exports are I think getting increasingly important. Wonderful. We'll come back on the scaling journey in the next round, but Renuka, would love to kind of get your thoughts. See, globally, 5 out of I think the top 10 valued agri food companies are basically life science focused companies, biotech focused companies. In India, we still see this as a very nascent space. You've of course spent a lot of time in the space, right? And question to you would be that why do you think biotech and agri-biotech is kind of important as we kind of get into this next decade where a lot of these climate related risks also kind of threaten productivity and the way we do food and agri planning? And where do you think the opportunities lie within the larger gamut of kind of, and with that maybe a bit of your backstory and what you guys do as well. Thank you.
So I think all day we've heard a lot of people speak about productivity. We've heard a lot of people speak about climate change. And we've been right now talking about exports, where quality matters. And when all of this comes together, we've provided information to the farmer that he's probably going to face a heat wave. But what can he do to protect his crop? Good seeds will take about 8 to 10 years to develop. Seeds that would be climate resilient will take that much of time. So what is it that the farmer can do today to protect his crop? That is a very important space that AgBiotech plays. What AgBiotech will help the farmers do is basically give inputs that can make the crops climate resilient. And despite the fluctuating climate, give quality produce that the exporters can then export and farmers can get value for the produce that he's producing. The problem that we see currently is that farmer has to choose between, do I use efficient, fast-acting chemicals, or do I use biologicals, which may take a little while. And for us, this should not be a question for the farmer because honestly, he doesn't have that much of time. So why can we not make inputs that are just as fast-acting, just as targeted, so that he doesn't have to make a choice between protecting his crop and sustainability? So I feel this is a space that only AgBiotech can solve for. The last point being, once we are using AgBio inputs, we are automatically reducing the residue levels, which means more of our farmers can export their produce. And one last point is reducing the input cost for the farmers. So once all of this comes together, I think a lot of problems for the farmers are solved. The dream of doubling farmer incomes is essentially what we would, achieve. I think at the cusp of all of this, at the intersection of all of this, lies the capabilities of AgBiotech. And that is exactly what we do at BioPrime. We basically focus on understanding communication systems in plants. So we're developing molecules that can modulate plant processes. And we are building India's largest plant trait modifying microbe library, which will help crops become better or better climate resilient. So I think this is a very, very big space. And I think India is just about waking up to that challenge. We've seen a lot of successful startups in Europe, in US, very close to either mergers or acquisitions, very big value mergers of acquisitions happening. And similar trend will evolve in India as well. So I think this is something that we would see very fast picking up in the next 10 years, and I'm very bullish about it.
Wonderful. Thank you so much, Renuka. moving on to kind of the money man or money matters here, Hari, you've of course represent Samunati. Samunati is a very well-known name. All of us know about it. So my question to you would be, we're yet to kind of scratch the surface as far as, agri fintech is concerned. We're at the very first elements of seeing how data can become an improvement and an enabler to enable, formal credit and capital. So where do you think, as somebody who's now moved on to becoming an ecosystem of sorts, as Samunati, where do you see these fintech opportunities that lie? What are some of the, again, oft-used white spaces in agri fintech that you guys foresee, and what are you guys bullish on?
Sure. Well, good evening, everybody. Of course, as Samunati, we've been on this journey we are in our 9th year, and we were in this space when it was certainly not so fashionable to be in agriculture or agri-tech. I think the name tech, as Hemendra said, has already made the space a little more sexy than it was. But I think where technology can really help scale up agricultural finance is in 2 or 3 dimensions. The first dimension is how can tech help in faster customer acquisition and customer origination, which means from an increased scale and outreach, how can tech help in those dimensions? The second is, how do you improve the speed of customer onboarding, from customer acquisition to onboarding? How do you digitize the underwriting process? And what are the elements which can be underwritten digitally? Because some things which can be and some things which can't. The third is from a monitoring perspective. As we go towards smaller and smaller ticket size loans, you will find it more and more difficult to cost effectively monitor the loan. And that's where technology has the third dimension of monitoring. I think we are seeing, as Samunati, some action in the fintechs or the agtechs who are now trying to get into fintech, bringing the benefit of all the data points they possess on their customer traction, on their customer experience, and you bring that to a lender. I think a lot of benefit there in there. So that helps in both customer acquisition, because the customer, the anchor customer, already knows the ultimate borrower. Secondly, there is a benefit of their experience, their track record with the ultimate borrower, which can be used in underwriting. And 3, you can, from an OpEx perspective, take the help of the anchor in the risk monitoring. So it makes for a more scalable, from a time, cost, risk, scale continuum. I think that's where tech is there, but it's certainly not evolved to a level where it's a one-stop shop. I think a lot of the agricultural lending is still, I would say, phygital and not digital entirely, but it's a journey.
So let me ask you another question around, and this is a slightly debated one. So lending often is kind of, there's a whole element of this is not a very disciplined and be waived off and stuff like that. In that kind of expectation, I'm talking about from a grower segment, not maybe the trade. What does it take to kind of, really build scale and sustainability for anyone who's aspiring to become, a fintech company or an agri-finance company? So the question is that how does one stave off that, this is free money, right? And what's been some of the learnings along the way for you guys? Maybe if that could be shared, wonderful for the audience.
That's a great question, because we've had, I think, 4 dozen loan waivers, central, state, and otherwise different politicians saying different things. And still, we've had a 98% repayment for the last 16 quarters. Utta to data hi hai. But what I would say is, when you are lending to farmers and when you're trying to get the credit to the farmer, it's important to work through the community, through the ecosystem around them. Because the moment a bank goes to a farmer, it will always be seen through the prism of, this is a bank loan, this will be waived at the next electoral cycle, and it keeps happening at frightening frequencies. But when a farmer collective or an FPO facilitates credit to the farmer, either in cash or in kind, then it is the FPO representative, their own community member, who then asks for the money back, or who indeed facilitates the whole lending process. Saying no to your fellow community member is a lot more difficult than saying no to a bank, because the farmer has to be within the community. So aligning the incentives and aligning the whole social capital, which we predominantly rely on, social capital and trade capital. Social capital is vintage, trade capital is track record. That is critical in building a farmer finance piece, and which is why from lending to the farmer collectives, which is a space we've been in really for 7 years, only when you have sufficient comfort on lending to the FPO or the collective or to any aggregation of farmers can you then go one level deeper and, hey, let me now lend to a slice of the member farmers. And I think that is a much safer way and a much more cost-effective way of getting in. I'm sure as as you go ahead and take further challenges of scale, you will obviously evolve this model, but that's the experience so far.
Wonderful. So let me jump to Vilasji, as somebody who might have kind of used finance as an element of scale. What has been your experience and Sahyadri's experience? How important is kind of, finance in the whole scale-up journey, both from an enterprise or an FPO level? And secondly, the two part is that when you think of just maybe exports, given that a lot of expertise, institutional expertise lies there, where does one build a moat in exports, right? If you have to think of that. So those two-part questions, please.
On the finance part, I think on the farm production level or on the production level, at post-service level, I think in India we need a finance for creating the infrastructure and also for the working capital in big way. All the EPCs are struggling for both way, for the day-to-day operation in cash flow and also for creating infrastructure. And at the farm level also is the same thing. So when in the traditional banking system, all the bankers, they are forced to finance farmer just because of the priority sector, their targets. But as a business, nobody is financing farmer. And that is because they are thinking that they are financing to the gamble. And it's a reality that all our farmings, whatever the crops we are growing, it is like a gamble. So how we can make it a sustainable business? That is the first question. And if that is going to happen, then finance is not an issue. Then you can see everybody, whether it is a NBFC or whether it is a nationalized bank or any private bank, all are ready to come forward for finance the activity. So that EPC level, how we can make it that every farmer as an entrepreneur and as a successful business. So if we solve that problem, then finance will not be issue. At Sahyadri, during our journey from the beginning to till that, we have observed this change. In the initial period, we also faced a lot of issue on the finance side. But after creating the successful business model, then that problem got solved with the support from the nationalized bank, private bank, and now even the investor world. On the export side, I think the core challenge which we are facing, that we are focusing on all our traditional commodity export. But the real benefit will come with the high value and also with the high margin commodities. So the commodities like the horticulture or the meat or the poultry and then even the spices, cashews. So I think such commodities we need to focus for agri-export from India, because if we are creating better value for the farmer and also for the overall our Indian economy, then there is I think we can have focus on export side. So that is how we can make it possible. That is a big question, and that I think in that the farmer's own initiative. If farmer is thinking that export is a real benefit for him, and for that then he focus on the quality improvement, on the standard improvement, on the efficiency improvement, then we can scale up the export. So along with the other stakeholders' effort and with the core farmers' initiative, I think then we can see the real change.
Wonderful. So basically a lot of role of both capital in terms of infra creation as working capital both. But I think the crux was that if you have the right business model, money does follow in that way. And the second part is if you focus on value addition overall, that is, and of course quality, Those are kind of two areas in which moats could be built in an exports business. Agam, two-pronged question to you as well. What are your thoughts around kind of building, credibility and a defensibility in exports? And of course, with the segue that how does kind of, the whole plant science element play a very strong role there? How does the marriage of both worlds kind of happen as you kind of look forward in the next decade?
So moats are built around value systems that you can build. And I mean, plant science help you build moat around the first value system as Vilasji was talking. So if a farmer or a community can create or can grow a substantially differentiated produce, the quality, the grades, if they can become better, and if you can deploy plant science at very fundamental level, like how Renuka was mentioning, using bioag or using some plant science, using earth observation, if you can use any of those things to improve the quality of the produce, the grade of the produce, then you have a better differentiated produce. So that's where you can create the first moat. The second moat lies in the process, where there is a lot of information asymmetry, where to sell, who to sell, which are the better paying countries, which sort of produce, in what form will that product be consumed in those countries. And so if you can solve for that information asymmetry and then also find a way or enough knowledge bank around penetrating unfamiliar markets, then you will create a moat in the process. So around process and production is where I think the moat for the large export business will arrive.
Wonderful. And kind of, taking a leaf out of that, Renuka, when you think of kind of scale and what are some of the pathways to scale when it comes to, much more focused biotech and product-led companies in India or otherwise? Do you think that larger agribusinesses are threats? They're more collaborators? I know the answer, but what are thoughts there? Because I know it's a bit of both, right? So what do you feel as an entrepreneur navigating that space?
Yes, I think one of the key factors for ag biotech not really picking up, especially in a country like India, has been the scalability of the technology and, of course, the data gathered around and the trust factor built around the technology. So that definitely has been the issue. For us, we look at it in terms of not like a competition model. We look at it from a more collaborative approach. We recognize that our strength lies in discovery of molecules and discovery of microbes and building products around it. Currently, even speaking globally, there are about 5 companies that can manufacture signaling molecules for targeted process modulation in plants at scale. And so that definitely gives us a moat in terms of collaborating with bigger corporates rather than competing with them. So for us, we have partnerships that help us, get faster penetration. And on the side, we keep working on developing and enhancing our technology. So for us, that has been the way.
Wonderful, thank you. So in the interest of time, I'm cognizant of we've crossed 8 o'clock and everyone's hungry, including me. Just last thoughts is that what we've tried to do today is just to kind of throw a spotlight on these 3 sectors with some wonderful practitioners, and I'd like to thank each one of you again for kind of spending the time and giving us your valuable insights. But what we essentially are saying is that, all these 3 spaces are intertwined, right? So if you have to become globally competitive, you have to figure out how capital plays a stronger role, how science plays a stronger role. If you need better science, you need more capital going that way, right? So somewhere all these 3 are kind of also interrelated and individually also very, very deep, areas in which more can happen, and we hope to see more startups in the space. With that kind of, I'll again thank each one of you and a very lovely and patient audience, and I'll hand it back to Keshav somewhere. Wonderful, okay. Hand back to Keshav. Thank you so much for giving us the chance.
Shubhadeep just said I gave him a chance. That's a joke. But thank you for giving me this chance. And Vamshi, I'd just like you to call upon to give the closing note and remarks. Before I go, my closing is that we have the bar and the cocktails and some very delicious food there. If you meet me outside, tell me what your favorite cocktail was. I think you will enjoy the menu. All right. Thank you.
Thank you guys for patiently waiting. I'm not going to take too much of your time. I think today's session was really interesting, bringing together all the entrepreneurs, the ecosystem enablers, and, one of the best, brightest minds here. So this platform was really to kind of celebrate the journeys of the milestones you guys have achieved or the founders who are trying to build for this. So we're really happy that we could kind of build this event here. We hope you enjoyed all the insights of our sessions and from our panelists, as well as all the speakers over here today. From Kalaari's perspective, we are committed to being part of this journey from a long-run perspective and help entrepreneurs with building the disruptive technologies in this space. I'd like to thank each and everyone of the panelists and speakers who have taken time to come here today. Most of them have flown here, so we are very, very glad that you guys could make it here today. It wouldn't have been possible without thanking the folks from Omnivore and Google who have actually come together to make this event possible. And a big thanks to the names you have heard, Keshav, Saborni, Sagar, and a lot of these guys. Thanks a lot for pulling this event together. And the best part of agriculture is, I think, it yields great, delicious food. So without ado, I think we can actually kind of go and enjoy the rest of the evening and head towards the dinner and the rest of the evening. So thank you guys again, and really appreciate it.